It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
There is this real momentum from Wall Street. We're basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Thursday morning, good morning. A couple of minutes to go until the opening trade. It's the morning after, really. Yesterday's session feels like a bit of an anomaly. You had the Trump trade on turbocharge, and as a result of which, maybe actually the relationship between Europe and the United States broke down a little bit in terms of the way that it normally functions. So European stocks faded. There's a whole bunch of reasons for that yesterday, but the Trump trade definitely part of that narrative. US stocks, as you can see, up to the moon. Off we went to the races. Does that relationship start to reconnect a little bit today? Let's take a look at how these European stocks are going to open, as Chris says.
I will show you how to get the best funding for your startup idea.
Really interesting to watch. There are some single stocks that are focused on as well, but the Trump trade still the dominant theme when it comes to what is happening here. Certainly was yesterday. We're getting a bit more nuanced in terms of our reaction now. Here we go. FTSE 100 higher, the opening trade there. A little hard to call at this point in time. First couple of seconds. The IBEX is open. It's up by 0.3%. Stock 600 in aggregate starting to price this all together up by 0.1%. Remember that chart I showed you earlier on of where Europe closed and where the US closed. You are not seeing that gap closing in a meaningful way this morning, which I think is really, really interesting, Critty. work out what is happening below the surface. I think there's going to be some interesting maybe answers to the question I'm posing there.
It's really something we're going to be keeping a close eye on, guys, especially when we look at this makeup. But right out of the gate, you are seeing a really interesting kind of sector move here. And I'm going to start with the tech space, because one of your biggest index contributions this morning when it comes to the stock 600 is actually SAP. And we are still waiting for some of the other kind of German trades to shake out. So take this with a giant grain of salt. But that is where you are seeing the index contribution, at least early this morning. I'm curious how much of that has to do with some of the numbers we got out of ARM, out of Qualcomm yesterday. Is there a tech theme, despite them being substantially different businesses? You are also, as Anna, seeing a kind of combination of some of the commodities trade there, a little bit of banks. I'm not seeing a clear market read-through. This might be a regional story.
Right, yeah. I mean, the basic resources trade is quite prominent, isn't it? Up by nearly 2% on mining stocks. Is that a global growth story? Is that some optimism around the U.S. economy outweighing nervousness around tariffs? I mean, maybe that's a stretch, but that's where we're seeing a lot of the action this morning. Basic resources on the move higher.
So you've got a strong China story this morning. Chinese equities have been up really quite strongly. So you've got to factor that maybe in.
Yes, but it was export driven, wasn't it? A lot of that, yeah.
It was. So there was an import story that was weaker, I agree.
Yeah.
But I think maybe there's a little bit of a Chinese halo effect. What are commodities priced in? Dollars. So maybe that's a factor as well, which is something that could take us back to SAP as well. Huge revenue generation in dollars in the United States as well. I wonder whether that's just a revenue translation story as well, that tech could do better in this kind of environment as well, maybe as a little kicker as well into that narrative too. SAP's had its challenges recently, but I think it's interesting that you are seeing the commodity stocks doing as well as they are. BP, you've got Rio Tinto, Glencore, all trading higher this morning. SAP, big dollar earner, also tracking a little bit higher as well. Big exposure to the States. But Novo's quite soft, but a big move yesterday.
A big move yesterday. And speaking of a big move, the DAX, we're still waiting for the index to actually open and fully shake out. But yesterday dropped 1%. So I'm also curious how much of this green on the screen you're seeing in Europe is really a reaction to what you saw yesterday as well. Remember, we did see Europe sell yesterday. So there might be just simply a little bit of a shakeout. At least we're seeing that in the currency markets, where weakness was the story. This morning, it's strength. I'm curious if that shakes out in the equity markets as well.
Interesting to see banks doing well. Again, yesterday, banks were one of the sectors that did okay here in Europe. And
in the States.
And the States in particular, but even in Europe, we saw that a little bit. And so we see that, maybe because rates stay higher for longer and that plays out better. Well, that's the US story. Anyway, there's a lot of moving parts, but banks seem to be resilient once again. Only two sectors in negative territory, so we are seeing a little bit of a bounce after yesterday's selling, perhaps.
We are, and we should mention Air France as well is also taking a big beating here. You are seeing their stock down about 11-12%. It looks like their third quarter operating income miss is really taking a hit. That likely to show up as well. And I'm now hearing that we are getting the DAX open as well. And as expected, green on the screen there, higher by about 0.6% when we look at that index. The outperformer of the entire continent this morning. How much of that is a political story? How much of that is a positioning story? Let's ask a true expert. George Deba, head of European equity and derivative strategy over at BNP Paribas. Marcus 360 joins us around the table this morning. What is going on with the DAX? Is that a positioning or is it politics?
Yeah, good morning. Thank you for having me. I think if you take a step back and you look over the past year or two even, the DAX has a bit decoupled from the German economy and politics. And that's mainly because a lot of the constituents of the DAX, including SAP or Rheinmetall, generate a massive amount of their revenue outside of Germany. And hence the relationship between economic or political impact into the equity market is not as linear as it used to be. And I think that is exactly what's happening. If you look at SAP particularly, we were surprised of this move yesterday because, again, as Guy just mentioned, it has a large exposure to US. It is also fundamentally doing well, and the dollar revenue should have aided it. But because it is the largest constituent of SX5E and Europe, I think it has been taken with the wagon of selling into Europe from top-down investors. And we're just seeing a bit of a reversal of that trade today.
So you talk a little bit about how there is this kind of a divergence in the politics to the equity market, but is there a more clear line when it comes to the Trump trade? What is the Trump trade when it comes to the European equity market?
Yeah. I mean, I'm sure your listeners have listened to the Trump trade quite a lot over the past week or 2 weeks. And yesterday, what we've seen was a clear Trump trade on override, if you want. You know, anything which is domestic into the US, small cap, more value type of sectors have performed quite well. Anything which is more like EU renewables or potentially at risk of trade tariff has been actually penalized. One thing that we saw yesterday, which was quite interesting, is we have this Trump baskets, obviously long versus short, winners versus loser. Many of our peers also have it. And since the open yesterday, it gapped 4 to 5%, and it's traded the whole day at 4 to 5%. It hasn't really moved, even though the market went -1, +1.5, then -1.5. Yeah. That spread stayed relatively quite flat throughout the day, which shows you that indeed, if you were on the right side of the trade with a long short, you would have fared quite well.
What about some of the European thematics that we've been playing of late, George? I'm thinking here about renewable energy, for example. I mean, Vestas was down on its numbers on Monday, was down yesterday substantially on the Trump trade, and that whole sector under pressure. It's down again today. Pretty flat, actually, relative to the last couple of days. But what visibility do we have around that sector?
We don't really have quite a lot of visibility, to be honest with you.
We have a lot of rhetoric and a lot of comment.
Exactly, we have a lot of comment. There's also, within the renewable is a bit of a new type of industry compared to the rest of the market, if you want. And it's also been a very finance-driven one, which requires low rates. And we haven't had that over the past 2 years, which also some legacy problems around the contracts has not helped the industry completely. But, you know, European companies and European governments are very committed to it. And so it's just about the timing.
A market starting to distinguish between European businesses that produce for America in America, and European businesses that produce for America elsewhere. Is this going to become, because that will dictate where the tariffs fall, I suppose.
Correct, exactly. And I think that's one of the misconceptions that people have, is that they look at companies with a large share of revenue in the US and they think that these companies are going to be penalized. However, if you look again, we divide our European market into 3 sectors, 3 parts. European domestic, European China, and European US, i.e. which has the largest share of revenue compared. And the best performer this year, even yesterday, are the European companies with a large share of revenue in the US. And the main reason behind it, as you rightly mentioned, is a lot of their cost production is local, and hence they won't really be tariff-based implication for these type of companies.
Can I ask the opposite kind of question? When do those other 2 baskets start to pick up? Because we must be nearing the point where, and I feel like I've maybe asked this question a few too many times over the last few years, we must be reaching the point where Europe is cheap enough, the news is bad enough, and you start to think that maybe actually, therefore, there is only upside from here. China potentially could stimulate in a much more substantial way with the Trump presidency. Europe may finally figure out how to get its act together. You may get some sort of a peace dividend out of Ukraine. You may get the ECB cutting more aggressively than the Fed. All of these things, you put them together in a basket, would seem to signal that there is the potential finally for some outperformance.
Music to my ears, to be honest with you, which is a pitch that I've been trying to communicate to many investors for the exact reason.
Why aren't they buying?
Because sentiment remains lackluster, and because performance coming out of the US remains a lot more better than the one in Europe. And I just came back from a visit and roadshow in the US, and the narrative continues to be the same. US exceptionalism is here, growth is better, performance is better. And Europe, there is still a bit more domestic issues. Now we have also the German political issue that brings a bit more uncertainty. We're focusing on that.
But maybe clarity as well. But at least we get an early election.
Exactly.
And we start to move.
So I think Europe offers a very good contrarian long-term opportunity, but you need sentiment to turn, and you need us to get our ducks in places, which will take a bit more time. But as you rightly saw, we have all the right things that allows us to outperform. I think it's a 2025 story for now.
Are we still looking at some of the other asset classes as factors in the equity story? For example, the last time we had a Trump administration, the common trade was oil is a hedge, or oil is an inflationary, or oil is an input. We had the currency picture, the strong dollar being a continued component. Do we need to be paying attention to those other factors right now? Or is this kind of, are we returning more to maybe a FOMO moment or a valuation moment in terms of deciding whether or not you want to get into the stock market, either side of the Atlantic?
Yeah, so it's too soon to say, if I'm completely candid with it, but the reaction yesterday and also some of the investor calls that we've had shows that potentially now the main risk around the Trump trade is a rotation out of your winners and where it's over-concentrated. So over the past year, or let alone 3 years, we've seen that most investors are overweight the US, and within the US, they're very overweight big tech. And right now, the question that people ask, and some of the things, are we going to see a rotation into more domestic, small cap, and hence do we have a lot more legs to go there? And I think the answer is, if you look simply at positioning and how people have been so overweight the big tech versus the other, the answer is could be yes on that respect. But obviously, we need to watch on all other risk assets, which have performed in line with what you would have expected, the textbook of Trump trade.
Right, that's nice. It sets up my question nicely. Talking of risk assets, is there also a risk that we see money going from those overweight big tech positions into crypto?
Correct.
Into crypto?
Into crypto.
I know that's not your universe, but it's
sorry.
a risk. But it's a risk to stocks, isn't it?
Yes.
This asset class that might get more political blessing, I suppose, and could tempt some of the retail crowd that maybe have piled into Nvidia.
Yes.
Into something like that.
It could be. It's not something that I could potentially comment on it, because I suspect within the world of asset manager and institutional, we're a lot more focused on the equity market and the conventional asset market. Retail could actually switch into crypto. I suspect they're also already quite big in crypto. So it's a question mark to be seen.
We'll park that one.
Yeah.
We will watch with interest. George, thank you very much indeed for dropping by.
Thank you.
George Abbas, Head of European Equity and Derivative Strategy, joining us from BNP Paribas Markets 360. Call 6 looks like this morning. Let's take a look at the centre of gravity in Europe. It's interesting to see that we do see a little bit of a tech coming back into bid, a tech bid coming back to ASML, a touch higher this morning, SAP as well. Maybe a bit of baby and bathwater yesterday being maybe one of the issues around there. But luxury's a little soft, which is interesting considering what we see in China. Schneider's a little soft as well. And Novo, look at that. Big move to the downside, but a big move upside yesterday. Let's talk about the single stocks in more detail. Joe's here.
So we got a big move in Air France shares this morning following their numbers. Now traders and analysts are pointing to increasing costs at the company, not just fuel, but also it is wages weighing on the outlook for their earnings. According to analysts, it looks like potentially some downgrades to consensus estimates will be coming for the flagship airline over in France, the flag carrier over there getting hit hard today. Then continuing in the aerospace theme, we have got a couple of earnings out today, as we mentioned earlier, from defence. Rheinmetall potentially not getting as much of a boost as expected following their decent beat on their numbers, and Rolls-Royce actually declining. That stock is up massively though over the past couple of years, so potentially just kind of trimming at some of those gains in terms of their numbers. They did look pretty solid, but one of the best performers over the past few years in the UK on that one. Then over in the payment space, I think we're going to check in on another big move. This one actually halted in early trading. This is over in Amsterdam, seeing sharp indications lower on Adyen. It's the payment processing firm, and they have seen a big drop in some of their payment processing transaction volumes, according to their statements. So we're waiting to get a proper price on that, but traders were warning potentially double-digit declines in those stocks. Then the renewables, remember we've got a potential stake by Elliott in RWE, lifting that one, but the rest of the sector can't catch a break, really. Bank of America is today downgrading a couple of ratings. They've cut Vestas to underperform, and Siemens Energy comes down to neutral from buy. They are citing the new Trump presidency and potentially fewer contracts in terms of renewable energy projects in the US. So that sector really not catching a break after those massive declines. Remember, some of those stocks were down more than 10% yesterday. Then in terms of your UK earnings, BT, that one looked pretty steady to me, but actually slipping a bit. There's potentially some debt concerns at that one. Sainsbury's as well, maybe a bit of easing in the food prices hitting Sainsbury's today. And ITV, this one pretty clear. It is a sharp drop down in some of their ad revenue, according to the latest analyst comments on that one. So all of those UK earners actually declining in early trading today. Finally, the other one to bring you, Daimler Truck. Now that one was actually lower on TradeGate, so potentially that one is not moving the way we expected. Maybe that was already priced in. The truck stocks had a bit of a rough run, given some declining orders, particularly in China, has hit that sector. So potentially just coming back up, maybe a bit of weakness yesterday on the Trump tariff concerns as well. But Daimler Truck holding up today, up 1% in Germany.
Joe, thank you very much. Joe Easton joining us there from our equities team. Lots of moving parts. I want to focus on the basic resources, just because we were mentioning this at the top of the programme. Had a very useful message from a viewer, which is brilliant. Do like it when people get in touch. Agreeing, Guy, that it has a China flavour to it, and specifically on the imports, drawing our attention to commodities imports. So even though the import story was weak, the commodities import story was pretty resilient, and that is the view coming through to me on the IB this morning. So thank you very much for that. And that seems to be supporting commodity prices, and as ever, that reads through in some of those mining stocks.
Adyen shares halted in Amsterdam. The stock, it looks like it's retrading now, down circa 11%. The payment company its stock has always been a little bit volatile. So we've had some big jumps in this stock over the years, and today looks like it is no exception. But I guess fintech is a space that you would probably anticipate that probably would be what you would see. But the Q3 revenue certainly looks like it's missed estimates, and the market reacting in a fairly substantial fashion. So we're down by, let's call it 11% right now.
Yeah, it's going to be interesting. But when you look at the rest of the indices, though, green on the screen, it's a pretty broad rally when you look at some of these broader indexes as well. And I'm still kind of trying to figure out what we're pegging this to. What is the reaction? Because some of the pain is an individual stock pain. Airbus, for example, trading lower. Air France taking a little bit of a hit as well. These are all individual stock stories. But from a sentiment perspective, feels like all clear.
Does it?
That's what I'm saying. I'm a little skeptical. What's going on?
Is it a little premature? It's maybe just a little bit of a turnaround from yesterday. I'm just diving into some of those individual movers that you were talking about. Swiss Re up by more than 6%. And this is obviously a fairly substantial business. They had numbers out earlier on today, and some of those seem to be going down well with the markets. U.S. liability reserves increasing seems to be the headline that is moving the markets.
Yeah, that's the third biggest points gainer in terms of what we're seeing on the Stock 600 this morning. But SAP is up. It got thrown out pretty hard yesterday by the market in terms of its position relative to maybe some of its US peers. Shell is tracking a little bit higher. ASML's another obvious story. We've got the commodity story in there as well. Glencore, Total, Munich Re's maybe rising as well. But it's interesting to see all of that coming through. The stocks that actually moved more positively yesterday seem to be maybe seeing second-day selling.
Yeah.
So it's interesting to see that actually if you did well yesterday, you're doing badly today.
Yeah.
And the flip side of that, working on the more positive side.
Can I just mention, we have a 1% difference between how the CAC and the DAX are trading. The DAX is higher by 0.9%, the CAC down about 0.1%. That is a massive divergence. I'm curious if it's going to show up in the bond market as well.
Yeah, we'll keep exploring that for sure. We did see early on in trading a little bit of divergence in the bond market story, very much at the edges, and we don't see much of it anymore, actually, just looking now. And they all seem to be yields moving a little bit higher in Europe. Maybe German yields a little more than the rest, but hardly anything in it. Coming up on the programme, we'll get back to some of the German story. The CEO of Commerzbank has told us that UniCredit's approach has been, quote, interesting. Not what you'd expect from a friendly approach, were the words of Bettina Orlock. We'll bring you more from my interview with the Commerzbank CEO. That's next. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space. That actually matters a whole lot more. It might shock some of your viewers.
You're watching the close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live every trading day. Balance of Power live around the world every weekday, only on Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Welcome back to the opening trade. 8:21 here in London. So we are a little way into the European bond market trade, certainly in continental Europe at least. And we do see those yields rising a little bit, certainly at the 10-year horizon. I'm looking at Germany up by 4 basis points, but others up by 2-3 basis points. So they're sort of in the mix, broadly speaking there. The UK moving in the other direction, but it has been going its own way of late, Guy.
Let's talk about what's happening with the shares of Air France this morning. Air France KLM down hard. The reason for it, it's not a revenue story necessarily. This is a cost story. It's a wage story, and it's also an older aircraft story. Remember, this is a company that had a revised wage deal. It is now having to factor into its numbers increased maintenance costs. Why do you have increased maintenance costs? Because you can't get the newer aircraft that you want. Therefore, the older aircraft need more spare parts. Benedict Campbell, who leads our global aviation coverage, joining us now on this story. Benny, how big a problem is this? Is this something that's going to go away soon, or is this something that Ben Smith and his team are going to have to deal with for quite some time?
I think the latter is the case. They came out with their earnings this morning, and they said that in the third quarter, costs were higher than they expected, and that in the fourth quarter, that would continue to be the case. They revised their cost estimate, as you said. Previously, it was a 2% increase. Now it's 3%. You might think, 1 percentage point, that shouldn't be too much, but clearly markets are spooked by this. The stock down 12%, and it's the bigger picture, really, as you alluded, that getting these aircraft into the maintenance shops. They have to be in more often. They're older. They are more expensive to service. And all these things are really rippling through the industry. We've talked about this many times. The Boeing issues, the Airbus issues. They're not getting, the airlines are not getting the planes, the new planes as quickly as they want. And therefore, they have the older kit. And that's weighing on the costs.
Okay, so that's the story, how it plays out for the customer. What about the supplier then, Benny? What do we know about Airbus and its ability or lack of to deliver the number of aircraft that it wants to?
Well, again, this has been the story of Airbus. They're not in as bad a shape as Boeing, but it's not that great. We heard from Wizz this morning, for instance. They're a big Airbus customer, and they said that the engine issues are improving, but they're still here, and they don't expect to get out of it by until 2027. So that's some ways off, and it gives you an idea of just how pronounced the issue is. On Airbus, we had their monthly orders and deliveries this morning. That was a very closely watched number because we're creeping towards the end of the year, and they've said they want to do 770 aircraft in terms of deliveries, and that's really going to require a pretty substantial sprint. To get that goal, to get to that goal, they need to do more than 100 aircraft each month, and that's a lot more than they've done in each month so far this year. So not impossible, but it's going to be a real stretch.
All right, Bloomberg's global aviation lead, Benedict Campbell, walking us through both the Airbus and the Air France story. We thank you so much. Let's pivot to another sector we've got our eye on, and that, of course, is the chip story. Qualcomm and ARM have indicated a resurgence in demand for high-end smartphones, but their shares went in opposite directions on their differing outlook. Robert Lee from our Bloomberg Intelligence team is all over it. He joins us now. Robert, let's start with the ARM story. Disappointment there. What caused that when we're maybe getting different messages from different parts of the sector?
Yeah, okay. Well, first of all, context is everything. ARM trades on a very punchy multiple relative to the rest of the US tech sector, is the first thing I'd say. And it's also been one of the top performers. The share price has approximately doubled year to date. That's even outperformed the likes of NVIDIA, which is only up around 30%. So there's a lot of expectation built into the share price. And second thing I'd say is you've got to understand where these two companies sit in the food chain. ARM doesn't make chips, it designs chips, which it then licenses to the likes of Qualcomm, to the likes of NVIDIA, etc. So in years gone by, and speaking as someone who used to cover the company as a sell-side analyst, back in the day in London, it's often seen as a bit of a canary in the coal mine. Now, I'm not saying in any way that is the case here, but the point I want to raise is its licensing revenue, because its chip customers will take licenses from it as that they would then use to build and design their future chips. So we did see a little bit of weakness and some concerns on that side. And I think, again, when very high expectations are built in, that's one reason why the stock price did come off a bit. Qualcomm, on the other hand, strong numbers, strong guidance. It's actually benefiting from strong demand from the leading Chinese handset customers on the high end. And so, you know, a very different story on that front.
Robert, thank you very much. Robert Lee from Bloomberg Intelligence joining us there with a number of angles on the chip story. There's the ARM numbers, the Qualcomm story. I mean, big picture, though, I think there's a lot of fascination with what Trump plans to do when it comes to AI, when it comes to chips and domestic production in the United States. That might sound like something he'd like, but some of the comments from his team suggest that maybe he has more complicated views on that.
What happens to the IRA? What happens to the CHIPS Act? What happens with that kind of funding that the Biden administration has delivered could be really interesting, but a lower regulatory bar could be fascinating as well. Maybe more M&A potentially on the table as well.
We should mention, though, that, of course, the executive branch has no control over the judicial system as well by design, but it is certainly something that is a bipartisan issue. We've already seen it in some of the big tech names as well. So a lot to digest. I imagine the interest rate environment will have a big effect on the kind of sweetening of the deal of M&A, the pricing, and, of course, the appetite as well. Coming up, we're going to go into that story, but right here in Europe, we're going to break the Riksbank decision, the start of a big day for central banks. Stick with us. This is Bloomberg.
Do you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because, being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics of the math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Welcome back to the opening trade. We are, of course, getting headlines in the central bank story. Let's kick it off with the Riksbank. Sweden's central bank cutting the policy rate to 2.75%, cutting it by, as expected, 50 basis points. Now, this is important here because this is a very easing environment specifically for the Riksbank, but it also is, of course, being compared quite aggressively to the Norges Bank. We are expecting that decision in just 30 minutes' time. That outlook looking very different. Immediately, the currency impact you want to see is very limited, actually, and a lot of that's simply because it was expected, Anna, ahead of this decision that this would be the story.
Yeah, and they're giving a bit of guidance, saying that they may also cut in December and in the first half of 2025. So if we're looking for signs of global central banks saying Trump's going to be inflationary, we're not going to do as much cutting as we would have done if he were not in the White House, we're not necessarily seeing that yet. We might get that, but not maybe today.
But is this also an indication maybe just of this big divergence that could start to exist
European on its own
on either side of the Atlantic? The ECB has to do more, despite what is happening maybe with the tariff narrative, which could, as you say, be inflationary. So, I don't know, maybe this is just an indication. Very clear. I wonder whether it's almost too early, though, for us to be reading into this, the Trump story. And maybe that's also maybe evidenced in the BOE a little bit later on.
Yeah, well, let's see, of course, what the BOE has to say, because they are also expected to cut interest rates yet again by another quarter point. Uncertainty ahead seems to be the common theme. Bloomberg's UK correspondent Lizzie Burden, standing outside the Bank of England. Lizzie, set us up for today's decision.
Well, Critty, amid all that uncertainty, I do not expect the Bank of England is going to want to surprise the market today. All the economists in our survey expect a quarter point cut, the second in the cycle from Threadneedle Street. But the focus, as you say, very much on the path ahead. You've got to also factor in Chancellor Rachel Reeves's budget, the biggest fiscal loosening in decades, hence that gilt market reaction last week, which, by the way, has wiped out any headroom she had and therefore makes more tax rises likely in the future. But because it's such a fiscal loosening, you saw traders paring their bets on BOE rate cuts ahead. But then, as you say, there's also the factor of Donald Trump's win. Tariffs could weigh on European growth, perhaps to a lesser extent here in the UK. But then you've got JP Morgan Asset Management's Karen Ward saying if there's a fiscal response, that could be inflationary. So it'd be really interesting to hear from Governor Andrew Bailey at the press conference later what his view is. It's too late for them to factor in the election into the updated forecast, but you could see the budget meaning an upgrade to growth and inflation. We're really going to see whether Andrew Bailey sticks to these hints about more aggressive policy ahead when we hear from him later.
Lots to think about then here in London on the Bank of England. Thank you, Lizzie. Bloomberg's UK correspondent, Lizzie Burden. And for viewers in the UK, we will have special coverage of that decision and the press conference. That starts at 12:30 p.m. London time. You can follow that on TV. And, of course, you can use the function Live Go on the Bloomberg terminal. Now, let us move on. Donald Trump's election is also having an effect on emerging market currencies, could give their central bank something to think about. Let's get details from Bloomberg's Valerie Teitel. Valerie.
Anna, it was quite a day for all EM markets, but there was a few different narratives I want to pull out. The first one, let's start with the Chinese yuan. A lot of people expected to see weakening on a Trump win when it comes to the Chinese yuan, but it was quite substantial yesterday. It was the worst session for dollar CNH in 5 years. It weakened 1.5% versus the dollar. A lot of that to do with the tariff story from the U.S. on China. Let's flip the board, though, and talk about another currency that we thought would move to the downside because of tariffs, but it actually didn't. It was the Mexican peso. At one point during the session yesterday, it had weakened nearly 3.5%, but that all snapped back because of a different narrative here, Anna. It was more of the fact that the market was really trading this pro-growth, pro-U.S., U.S. exceptionalism trade, and Mexico is a high beta play to U.S. growth. So it was a bit of revaluation on the Mexican peso yesterday afternoon and actually ended the session flat. When it comes to the expectation for growth, though, there was a very different view when it came to Central and Eastern Europe. I want to talk about dollar huff for a second. The Hungarian forint hit the lowest level in 2 years versus the euro, and it weakened versus the dollar as well. Now, this trade is all because CEMEA, or Central Eastern Europe specifically, is a leverage play on European growth. And as we saw in the trade yesterday, there was a lot of a dour mood when it came to the move lower in euro and the move lower in euro stocks on the hit to growth that these Trump tariffs could entail and their effect then again on Central and Eastern Europe.
Valerie, thank you. Lots to think about. Bloomberg's Valerie Teitel. Let's stick with the emerging market currencies theme. Bring in Phoenix Kalin, a global head of emerging markets research at Societe Generale Corporate and Investment Banking. Phoenix, nice to have you with us this morning. So, big picture, if we sort of zoom out from here, it seems that emerging markets are going to be dealing with this idea that on the one hand, they probably quite like a US growth story that's strong if that lifts, if that rising tide lifts all boats. But on the other hand, they don't want it to penalise them and to be at their detriment and to damage their currencies. How do you approach the emerging market story through that sort of big picture lens?
Yeah, so I think there are two components to this. One is that directional move in terms of the U.S. growth now being stronger, lower taxes, lower regulations, higher deficits. That's going to really gear up and leverage up the amount of growth we might see out of the U.S. in consumption and patterns and so on. And that is going to have a beneficial spillover impact into LATAM economies, into a lot of the European and Asian economies as well. So I think that's quite beneficial for emerging markets. On the other hand, we've got this relative value kind of dynamic where the U.S. is, again, going to be quite the exceptional story out of the whole world basket. And that's going to be quite a high differentiator versus other countries to look at. And that sets a really high hurdle rate for emerging markets. So for investors to think about investing in EM where there is more risk, more geopolitics, more volatility, it sets a much higher threshold. So I think there's that component to consider. But I think we are likely to see some positive underpinnings come out of the Trump victory, and especially out of the whole kind of red sweep, where the policies are going to be much more aligned and implementable. And in that case, perhaps there might be some upside to things around like geopolitics, for instance. If we have maybe a situation where there's upside tail risk for resolution around some of the conflicts, Russia, Ukraine, Middle East. Yeah.
So there's a lot in the mix. Still waiting for news on the House as well, aren't we? So, we're looking like the sweep is still incoming.
Yes, but increasingly looking like it is a sweep. Yeah. Clearly, we saw central banks stepping in yesterday. I think you probably saw that in India. You probably saw that in a few other places as well. What action do you think central banks in, for instance, Central and Eastern Europe might now take? Should we be thinking about, with the Hungarian forint at 2-year low, should we be thinking about rate hikes? Should we be thinking about rate hikes in other parts of Central and Eastern Europe? We seem to be talking a lot about cuts elsewhere around the world, but are there areas within the emerging market space where hikes are now back as a real probability?
Yes, for sure. So in Hungary, for instance, they are considering emergency rate hikes if HUF continues to depreciate at this pace, and we are reaching 2-year lows already, and they are quite cautious about that kind of sensitivity of the economy to the currency depreciation. So it's a possibility that we might see emergency rate hikes out of HUF if there is further depreciation there. In Poland, we saw flat rates yesterday. In Czech, we're expecting for them to cut 25 basis points later today. So they're moving quite cautiously. I think HUF is the one who is the most sensitive, and it's got the highest beta to dollar moves. So that's why there is so much sensitivity there. Plus, it's a smaller market, less liquid. Yep. So I think there is concern around whether or not that weakness in HUF can be extended. And yes, the possibility for emergency rate hikes is back on the table. And in Brazil as well, we saw that 50 basis hike. We're expecting for further hikes over the coming months. So they are definitely concerned about the external environment and the de-anchoring of inflation expectations.
Phoenix, how attractive is the carry trade right now in this environment, specifically when it comes to the peso versus the yen, where you're looking at potential hikes from the BOJ and weakness off trade and off the dollar in the peso? How attractive is the carry trade?
The carry trade overall is really not attractive. I mean, if we're looking at all of emerging markets, the annual carry that you get from EM is less than 1% versus the dollar. So it's very unsubstantial as a buffer that you have to protect against currency weakness. So it's not a compelling argument as it used to be in years past. And I think when it comes down to it, it's more about the underlying fundamental dynamics that you're looking at, growth differentials, the idiosyncratic stories that come out of these markets. It's much less about carry.
Okay, let's linger in the Eastern European space for a moment, because we spoke to a guest pre the election who was saying, these are the types of economies that do get hit because they're small, to your point about one of them at least, and open, and that's where I think his focus was on Poland. How do you distinguish between them and where you see the opportunities in Eastern Europe at the moment?
So we do think that Hungary and Poland are the most sensitive to to the dollar moves, to the treasury moves as well. They've got the highest betas to U.S. treasuries and to the DXY between 1.2 and 1.8. So very highly leveraged to kind of those dollar moves. And they will be vulnerable. Poland less so because it's a much bigger economy, much more diversified in terms of its exports and manufacturing and services sectors. Hungary, much more concentrated in terms of its reliance on exports. So it's going to be hit much harder in terms of those feed-through from the European economies into Hungary.
Can I just talk about the relationship between Central and Eastern Europe and the ECB? I've just seen a Deutsche Bank note dropping into my inbox this morning. We're lowering our central case terminal rate forecast from 225 to 150 at the ECB. There's a 75 bip terminal rate drop that the Deutsche Bank sees for the ECB. If the ECB starts to aggressively cut rates from here and do it a little bit more quickly than maybe anticipated, how does that spill over into the rest of Central and Eastern Europe?
If that does happen, and that's not our base case scenario,
sure. Yep.
Then that does give the CEE central banks more leeway to cut rates without fearing that they are going to damage their currency unnecessarily. So that gives them more scope to be able to accommodate their economies. But that's not what we're anticipating. We think that the ECB is going to be quite careful. Our analysis around tariffs is that it is not going to impinge too much on growth.
Okay.
Or on the inflation profile. And the ECB is going to be quite reluctant to act ahead of time preemptively. They want to see kind of the materialization of these impacts and what it actually means over the medium term before engaging in kind of decisive decisions.
Before it starts having an impact, you would have thought maybe some of the economic data may encourage them to be a bit more careful in terms of the rate story. Phoenix, nice to see you. Thank you very much indeed for stopping by. Phoenix Kellan, Global Head of Emerging Market Research at SocGen Corporate Investment Banking. Thank you very much. What else have we got coming up? We're going to turn to that German political story. The German Chancellor, Olaf Scholz, naming his new finance minister after firing Christian Lindner from the FDP. And it looks like we're going to see a snap election, probably at the beginning, or certainly over the next few months. Actually, I feel this morning that the dates are shifting around a little bit. Anyway, we'll get more on that story in just a moment. This is Bloomberg.
What about quantum computing? People talk about that. Is that something that I should be looking at investing in?
I've made a lot of mistakes, betting on these new technologies like AR, VR turns out to be not so big, 3D printing turns out to be not so big. My estimate is $100 trillion was invested in today's dollar in the PC CPU-based infrastructure. All this is going to get ripped out to put $100 trillion or more in our GPU-based infrastructure. In that sort of quantum of numbers, I feel that the quantum computing is going to be very small.
You always are worried about, I presume, geopolitical events. So are there some geopolitical events you're worried about right now?
Yes. I don't know why, but for some reason, I love thinking about black swans. And at the office, everybody thinks I'm weird because I'm always thinking about what can go wrong. But underpinning the AI is the chips. And the chips, despite the CHIP Act, which I think was a good idea for the US, I still think like 80% or so of the capex of TSM is in Taiwan. And so at the leading edge, a lot of capacity is in one very small area. Forget that it's just in China, it's in a very small area. I think that's very risky.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
45 minutes past the hour. Crude really choppy yesterday. Today a little bit softer, as you can see. Brent to TI both just giving back a little bit in the early session. In theory, Donald Trump should mean more oil. Is that actually the reality? How does the oil market deal with Trump 2.0? Let's find out. Nadia Martin-Wiggett, Director of Svelling Capital, joining us now. Drill, baby, drill, Nadia. Is that what we should be thinking about over the next 4 years?
Well, Trump did talk about oil and gas being America's liquid gold yesterday in his victory speech. Although we already hit record U.S. oil production in August under the Biden administration. So in practice, it shouldn't mean that much of a difference. But yes, he will be promoting more oil and gas developments.
Changes to governance in Alaska and the ability to get oil out of that particular, is that the area of focus, Nadia?
Yes, that is a part of it. Also, in terms of costs, you know, the Biden administration and the expectations for Kamala were that they would be focused more on, you know, the environmental impacts, you know, things like flaring, methane leakage, things like that. You know, there had to be more pipelines installed to have takeaway capacity for natural gas in order to promote growth in the Permian Basin on the supply side and things like that. So I think that's also an element that can potentially bring down costs for oil and gas producers in the coming years under a Trump administration.
Nadia, I want to zero in on that, and you kind of hinted to it there, but there were certain projects that the Biden administration was aggressive on and really kind of got a lot of flack for, and the likes of federal kind of fracking in New Mexico in terms of the pipeline in New York as well. Do those problems go away under Trump?
Well, I think the focus go away is maybe overstating it, but I think the focus will absolutely be on producing more and rebuilding and accelerating America's competitive advantage as the world's largest oil and gas producer, bringing down costs for local producers and also building up exports of both oil and gas. So they will definitely try to cut red tape and make it quicker.
So, Nadia, about 2 years ago, 2 years and counting, when the war in Ukraine first broke out and Europe suddenly needed a lot more of LNG supply, the issue in the United States was that the infrastructure to get it from some of the kind of sources to the actual ports didn't exist. Where are we on that? Does that infrastructure now exist?
Yeah, the U.S. has made big inroads in terms of building out infrastructure versus where we are in 2022, where we were in 2022, but there are bigger ambitions. And this is where, you know, Golden Pass, Plaquemines, those are two big LNG terminals that are being built. They're still not complete and fully running. That will be happening over the next year. And more importantly, when we think about that medium-term relationship with Europe, to have Europe not depend on Russian natural gas, which is something that Trump very blatantly pointed out in a NATO meeting. You know, the way to secure that is through American supply. That's how we keep Europe away from Russian gas. And so we believe there will be accelerations on building that out, especially towards 2027, 28, 29, and past 2030.
Nadia, let's talk a little bit about what's happening with the offshore wind industry. Vestas is down, on my chart, 22% over the last 3 days in terms of its share price. Some of that's its numbers, some of that is the reaction to Trump. Are we going to see less metal in the water in the United States as a result of a Trump presidency?
Well, our view at Svelling Capital is that, you know, offshore wind is not a proven business case and strong model. So I think that is the number one driver as to why things look tough. Trump has made it no secret that he's not a huge fan of wind. He tends to prefer solar. But still, overall, it is a problem, I think, first and foremost on the business case. And that's where renewable power that is successful and is making money and is doing very well, that is the part that should really grow going forward. And part of the reaction yesterday, we think, was unmerited in terms of the negativity towards some renewables because of this focus on fossil fuels. We need to recognize that we are short energy in general. So we need to develop both renewables and fossil fuels together and not make it a one or the other kind of debate.
Yes, and I'm really fascinated to see what policies are enacted around EVs with Elon Musk also making regular visits to the White House. Nadia, thank you very much. Nadia Martin-Wigan, Director at Svelling Capital, thank you very much for your perspective on commodity markets. Let's turn our attention to developments in Germany. Fast-moving story last night and into this morning. Chancellor Olaf Scholz's economic advisor, Jörg Kukies, is now going to become the finance minister. He replaces Christian Lindner, who was fired quite dramatically last night. This after Scholz called for a snap election after divisions over how to revive the lackluster economy triggered the breakup of his fractious three-party ruling coalition. Let's bring in Bloomberg's Europe executive editor, Chad Thomas. He's in Berlin. Chad, update us on the timing of all of this, because last night we were hearing Olaf Scholz has called for an election to take, or a vote of confidence rather, to take place in January. Others in the German political scene are saying that's not soon enough and calling for it to be earlier. What's the latest that we know about the timing?
Yeah, Anna, we were talking about this an hour ago, and I was saying to you then that things were moving quickly. In that hour since we last spoke, we've had the German opposition leader, Friedrich Merz. He is the head of the Christian Democrats. That's the party of Angela Merkel. He came out and said that he wants this to move much more quickly. He's asking for a confidence vote in the government to happen as soon, or actually as late as next week. If it would happen sooner, even better, in his opinion. And that he wants to see that snap election come in January. Why is this important? Because Olaf Scholz now has a minority government. He needs support from people in the opposition if he's going to continue on, even for a short period of time, until they have that snap vote. Friedrich Merz says he will meet with Olaf Scholz this afternoon to discuss all of this, but given the fact that he's now pushing, Merz is pushing for this snap election to happen much more quickly, we likely will see things developing rather quickly in the next couple of weeks.
Chad, what are the polling, if you believe it, is your choice, but what is the current polling actually telling us about who could form the next government were there to be an election tomorrow?
Yeah, the polling at the moment, Guy, is showing that Friedrich Merz would be the next chancellor, which, of course, is one reason why he's saying this should move quickly. His party, the Christian Democrats, are at about 30% in the polls. They're way ahead of others. All of the parties in the current government, Scholz's Social Democrats, the Greens, and the pro-business FDP, they have all really struggled in the polls. They're way below where they came in the election 3 years ago. And so it is likely that whenever these snap votes happen, we're likely going to have a Chancellor Merz, whom he will end up in coalition with. Hard to say. Obviously, if you have 30% of the vote, that's not enough to form a coalition on your own. Yep. So we will have, again, a coalition government in Germany.
And it'll be interesting to see what kind of spending decisions are made. Bloomberg's Europe executive editor, Chad Thomas, joining us. Critty, alluding there to what could come next, and also potentially the unleashing of a bit of German fiscal space that you could see on your chart next to you.
Yeah, it's really interesting here, and I think it's important for our global audience to just kind of understand just how much of the wiggle room, as Scholz puts, actually exists. And this is why they can have that conversation in a way that maybe France, the United States, and other economies around the world cannot in terms of their debt story. It's the debt to GDP ratios that matter. This bottom line in blue is the German debt to GDP ratio, including the projections from the IMF going all the way out to 2029. You can see how it's actually on a lower curve right now. It's actually standing at a 62% by 2029, expected to drop by 58%. The stark difference with this versus what we're seeing in France could not be bigger. That spread in the debt to GDP ratio could not be bigger. And this is the conversation that's been happening in that Haute to Boon story that we've been talking about for a good chunk of this year. Let's talk a little bit about how the German bond market is trading right now, because you are actually seeing something that is very rare, and that is bear steepening. That matters simply because this is something you don't see in Germany. That curve, that bear steepening, is usually associated with an expectation of a rise in inflation. You are not seeing that at the moment. The last chart I want to bring up to you has a lot to do with the idea of swaps. We're getting a little nerdy here. Shout out to our producer, Valerie Teitel, for making this, but it's the expectation of that increased issuance that's starting to show up. When you see that Bund yield actually getting higher, you really have to narrow in here, but take my word for it. The Bund yield is now higher than the 10-year swap. Do we get that more issuance, or is this just a little bit of saber rattling?
It's going to be fascinating to watch and could have a really big impact in terms of the European story on where money gets spent. This is obviously going to be something that I suspect that everybody's going to be talking about at the EPC meeting, which is taking place in Budapest today. We're seeing arrivals happening right now. Here's a live shot of the football stadium where that meeting is taking place. It is a huge day coming up, though. We're not really into the story yet. We've got the Bank of England coming up. We've got the Fed coming up a little bit later on. Both, I suspect, are going to see some sort of a Trump influence, particularly the Fed.
Right, yes. Is it too early for it to be an official forecast and official thinking? But certainly it'll be there in the questioning, won't it? Just how inflationary is a Trump presidency going to be? And of course that will be part of the Fed conversation, and no doubt also influencing the Bank of England conversation. And we've already had rate cuts from the Riksbank, so we're kind of as you were previously planning on the central bank story. So maybe it is too soon, but that's certainly in everybody's minds.
But maybe this is where the commentary matters more than the actual rate decision and the forecast itself here. The cable's still at a 129. I'm waiting for that to crack if this is the notification, the kind of notice that we're getting from the DOE.
Do we get that cracking a little bit later on? We're going to have some special coverage coming up of our of the Bank of England. Lizzie Burton's been out there all morning. Remember that we get the decision at noon. We get the 12:30 press conference. We will bring that to you live here in the UK with some special coverage coming up a little bit later on. You can also use the function Live Go for that. This is Bloomberg.
You know, Steve was a teacher. He taught me the value of focus, the importance of simplicity, the fact that making things simple is so much harder than making things complex. For those of us that were fortunate enough to work with him, he was the teacher of a lifetime. My first job was delivering papers. And I was about 12 years old. Everybody was sort of expected to work in my family. And I'd get up at 3 in the morning, pick up the stack of papers and start throwing. And usually come back and take a nap before school. Throwing papers helped start my college education. And I was the first person in my family that went to college. I knew that being able to do that was a privilege that I needed not to waste. Everyone saw college in those days, and hopefully today, as opening many doors and being able to stand on the shoulders of your parents, that education would do that.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
Everything you need to get the edge at the end of the market. market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Investors position for a second Trump presidency, with the S&P 500 notching its best post-election day in history, while his defeated Democratic rival Kamala Harris urges a peaceful transfer of power. Traders now turn their attention to the Fed and the BOE, with both central banks expected to cut rates by 25 basis points. We'll also bring you the Norges Bank decision in just a moment. Plus, a shock crisis at the top of the German politics, while the ruling coalition collapses after Chancellor Olaf Scholz calls for a snap election and fires his finance minister. Bloomberg understands that the economic advisor Jörg Kukis will replace him. Now let's take a look at the European markets map. Again, a lot of the focus is on politics. We have two big central banks, BOE, that's expected to lower rates by 25 basis points. We also have the Fed. That will move a lot of cross assets. We have a lot of earnings. We have a political crisis in Germany. We're trying to understand the fallout of potential Trump tariffs and extra trade concerns. NASDAQ futures, you can see, gaining some 0.2%. The dollar index, 1265. I'm looking a lot at what's happening over in China, because we could be expecting some kind of extra stimulus from policymakers as soon as tomorrow. The U.S. 10-year yield, 4.4118. Norges Bank just coming out with its decision, actually leaving the benchmark interest rate at 4.5%. A couple of corporates, because we are in the middle of earnings season, so Lyft shares soaring in pre-market trading after the ride-hailing company's fourth quarter forecast top expectations. Third quarter results also beat estimates, gaining some 20%. And then quickly, let's also get to Qualcomm, also giving a bullish sales forecast, saying that revenue in the December quarter could reach over $11 billion, surpassing analyst expectations. And you can see actually Qualcomm almost 7%. And then why not? Let's look at ARM reporting a disappointing sales forecast for the current period, and you can see ARM Holdings down some 4.8%. So again, we try and figure out what a recovering smartphone situation looks like. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, investors really positioning for a second Donald Trump presidency. Central bankers weighing whether their policies, his policies, could lead to slower global economic growth and higher inflation. Now, for more on this, let's bring in Bloomberg's EMEA News Director, Ross Matheson. Christian Keller, Head of Economic Research at Barclays, is also joining us. We have a lot going on. There's a crisis in Germany, and we also see Viktor Orban greeting a lot of the EU leaders over there in Budapest. Ross, let's maybe focus on the politics. I know there's a lot of analysis to trying to figure out how Donald Trump won so big. But also, are people worried about law and order in the country? Are they worried about who he goes after? Or is the focus now really on what he does to the rest of the world?
Well, it really seems to be what he's going to do, in a way, between now and January even. I mean, this is obviously a comprehensive victory for Donald Trump. So those issues around a long, drawn-out result possibly being contested, that seems to have faded away. I mean, you can see the comments from Kamala Harris last night. We respect the result. Let's now get on. You know, that seems to be the mood inside the US. But we can see Donald Trump already possibly starting to dip his way into various things, including global affairs. We know he's had a bunch of phone calls with leaders around the world, most notably, very quickly, had a conversation with the Israeli Prime Minister, Benjamin Netanyahu. Interesting to see what they would have talked about. And perhaps, you know, Benjamin Netanyahu asking guidance or seeking, you know, Trump's thoughts about the state of the conflict in the Middle East, including the war that Israel is still fighting in Gaza and Lebanon, and what Trump's view might be on that. So do we see Donald Trump start to, in a way, sort of shadow run US foreign policy between now and January? You know, he had a conversation with the Ukrainian President Volodymyr Zelensky. So certainly getting his way already into those conversations, and you can see leaders gravitating towards him. which is just a reminder that Joe Biden is essentially truly a lame duck president at this point.
Rosa, in terms again of these hotspots, so if you're Mexico right now, you're probably worried about what some of the Trump policies mean for you. We need to look at Russia, Ukraine. You look at the Middle East. You look at China. I mean, he also had Germany in his sights in the previous administration. Does that depend on President Trump, or does it depend on the team that he builds around himself?
Well, a bit of both, because there is a view, at least, that this time around Donald Trump may have a more experienced bench. He had people in his first administration who seemed to be quite randomly put into positions with no experience in those fields. He might be a bit more careful this time around. Does he then listen to those people is another question. There's a school of thought that Donald Trump, famously, here's the last thing that someone says on their way out the door, and that's what he actions. So it's very unclear how much he'll lean on that advice, but certainly he'll feel like, having done it once before, he knows a lot more about the job the second time around.
Christian, it's very difficult, right, for you. I mean, you're head of economic research, but this goes into, politics and how the team is built and whether they're loyalists instead of policies.
Yeah, I think it is it's very difficult for markets. I think there was a sigh of relief. It was much more decisive than people expected, so markets showed this with a reduced volatility and a rally in equities. But now the question is what happens over the medium and long term. And I think the general approach has been, take Trump seriously, but not literally. And so markets are probably discounting a lot of the radical policy proposals on, how high and how quickly tariffs will come, how many people would he really deport, in terms of immigration policies. But the question is now, what will come through in terms of policies? And some of this we will be seen over the next, half a year or so. We think it will take some time, even with tariff policies, to be implemented.
Our John Authors wrote a brilliant piece saying, look, where the Trump trades still are not priced in. And, of course, he's talking exactly what you're looking at, overseas surprises taking shape, tariff frictions, cabinet picks. Is there, again, as you see the world, has it changed dramatically in terms of growth, in terms of possible inflation, if some of the tariffs do go through?
Well, I think, first of all, markets right now look at this and say the world looks actually quite good. We are growing 3% in the U.S., growth slightly surprised in Europe for the third quarter and even in China. Now, going forward, if you were to think that he implements 60% tariffs on China, 10% on the rest of the world, the effects will be quite dramatic, in particular then if you see retaliation. Now, as I said, most people believe he won't do that. He's still a transactional character. He will use that as a negotiation tool. He will be tough on China, also in Europe, but probably he tries to get something out from the Europeans. And, that may work out. And I think this is what markets are pricing at the moment. And that's why markets are not, not really pricing the radical scenarios of him doing what he actually said.
Do we know who will be in his cabinet? We don't know, but are there speculations of people that are actually quite well known? Or will Donald Trump pick, loyalists that most people in the market may not have heard about?
Well, he does very much prize loyalty. We know that. There's obviously a lot of jostling already going on. You can see some people starting to advertise their services. Big question around Elon Musk. Does he have some kind of role in this administration, official or unofficial? And how does that, again, play into policies, not just in the US, but overseas? You were just talking about China. Donald Trump has made clear he's going to be tough on China, but equally, Elon Musk has very big businesses in China. And does that change the dynamic a little bit in terms of how Elon Musk sees China? And does he get in Donald Trump's ear about that? So that's one, possibly an official role or an unofficial role, either way, going to be very influential on Donald Trump when it comes to policy, both in the US and outside. But it's very early days. We're just starting to see people put their names forward for various roles.
Christian, does it change the trajectory of the Fed? So we're expecting 25 basis points. It could be an inflation if there's a lot more fiscal spending, if the tariffs, put on, even if it's not 60%, even if it's 10 or 20%, does that complicate the job of Chair Jay Powell?
It certainly does. It certainly does, and they will be very careful today not to, talk too much about politics. But the fact is that you mentioned fiscal, and so far we only talked about the tariffs and potentially the tightening of the labor market if you really deport many people who are now in jobs and illegally in jobs in the U.S. But the fiscal is a big question. I mean, we do know that Trump will very likely extend the existing tax cuts, which would otherwise expire by the end of the year. But then if there is a red sweep, which we don't know yet whether that will happen, but if there's a red sweep, we could be talking even about corporate tax cuts and a wider deficit than markets are currently pricing. We think rates markets probably have, now adjusted for the scenario where he just extends his tax cuts, but not yet for something potentially more.
Christian, we're looking at live pictures actually come from Budapest, where Viktor Orban, together with the EU leaders of the 27 member states, are basically, Viktor Orban is greeting them, and I imagine a lot of the discussion today will be, of course, about Donald Trump. Does it put Europe in a very difficult situation? We'll talk about Germany and its own crisis in a moment, but is there anything that European leaders can do to, if not Trump-proof their economy, try to make sure that they're not as dependent on the U.S.?
Yeah, no doubt. I mean, this is a very consequential election for Europe, maybe not as much as for China, but Europe clearly has been in his focus with regard to the trade deficit and with regard to defense spending. Some of the European leaders have also been quite outspoken, against Trump, and they're now pedaling back. And I think this will be very crucial for Europe. It could. Some people opine that it could be actually a unifying moment, so it could be good for Europe because he forces Europe to do what they need to do anyways. But it will be very crucial what happens in the next few months and quarters and how strong he will be on tariffs on Europe or whether he negotiates with them.
All right, thank you both for joining us. Bloomberg's EMEA News Director Ross Matheson, Christian Keller from Barclays stays with us because we also need to talk quite extensively about Germany. Coming up, a coalition collapses, a call for a snap election, and a new finance minister. We're live in Berlin with the latest on fast-moving developments in Europe's biggest economy. That's next, and this is Bloomberg. From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Welcome back, everyone. Now, Bloomberg has learned that Olaf Scholz's economic advisor, Jörg Kukies, is to become Germany's new finance minister. Now, this comes after the chancellor fired Christian Lindner following a dispute over borrowing rules. Now, the move has also led to the collapse of Scholz's fragile three-party coalition, with the opposition now calling for a confidence vote by next week. Now, for more, let's bring Bloomberg's Alan Crawford in Berlin. Alan, I mean, this frankly is messy, especially at a time where there are a lot of question marks of what Donald Trump would do for Germany. So how did we get here and what happens next?
Well, if you recall, this government, it came into office just at the end of 2021, and it was the first ever coalition, three-way coalition of the Social Democrats, of Olaf Scholz, the Chancellor, the Greens, and the Free Democrats, a kind of pro-business party of Christian Lindner, this finance minister who just lost his job. And initially, they were confronted with all sorts of crises. They were just coming out of the pandemic. Then Russia launched its war, its full-scale war on Ukraine. And there were the attendant, crises in terms of the energy prices skyrocketing. And the coalition was broadly popular back then. But then they just set about infighting. They couldn't agree on all sorts of issues. And it's become increasingly fragile. And then yesterday, Scholz gave quite a remarkable statement yesterday evening where he blamed the finance minister Lindner of essentially of egotism, of withholding spending just for ideological reasons, and effectively holding the country to ransom at this crucial moment. So the government still survives, but it's now a minority and limping on.
Very, very quickly, Alan, I mean, I guess, on top of that, the most important thing is the 2025 federal budget, which needs to be approved by the end of the year. So what happens with that?
Well, frankly, no one knows. At the moment, we just had the main opposition leader, Friedrich Merz. He called for a vote of confidence next week. It's hard to see how that can actually be brought about. Scholz wants it to come in January, followed by elections in March. But frankly, we're in not quite uncharted territory here, but it's very unclear what will happen other than further instability.
Alan, thanks so much. Alan Crawford there from our Berlin bureau. Now let's get back to Christian Keller, head of economics research at Barclays. Christian, I was so happy you were coming on today because you understand German politics and economics almost like no one here in London finance. Look, I mean, this looks messy. So I don't know whether we're going to see a change in Chancellor in the next 3 to 4 months.
Very interesting to hear that term, instability in context with Germany. That's something you never heard, right? And certainly it happened much more quickly than one thought. I mean, Jörg Cook is certainly a very competent person to fill that role now, but obviously this is about a political change now in Germany. And without actually going into politics, I think the sooner is probably the better. I mean, it's difficult to see how the situation would improve in the current situation. Donald Trump, gaining the presidency in the U.S., I think the current government is also not on the best terms with him. So overall, it does seem to move away to a new coalition would probably be helpful. And there needs to be a lot of policy change. And this is not just about spending here and there and maybe loosening the debt brake. This is about fundamental structural reforms probably that Germany needs at this moment.
Christian, let's just go to Budapest, where the European Council President Charles Michel is speaking to reports for the first time we hear from him since Trump got elected.
What is your message to Volodymyr Zelensky? What is your message to Zelensky?
We are on your side, dear people of Ukraine, because we understand very well, we didn't change our mind, that you fight for our common values, for our common principles. And that's why each European Council meeting was the occasion to strengthen our support for Ukraine. It is important not to give up, because strengthening Ukraine means strengthening ourselves. And we want a just peace, and this just peace has to be based on the principles of the UN Charter.
Is Donald Trump on his side? Is Donald Trump on his side?
Please.
Climate change. Are you planning to go to COP29 to Baku? And what is your plan to discuss with Ali about democracy? Because we have lots of problems.
There are two topics. First, it's important that we have this meeting on climate change, because we can see every week and on each continent the terrible consequences of this climate change challenge for all of us. It is the case in Spain, but not only in Spain. On each country you can see the terrible effects. That's why we need to act, and to act together, we need to meet. We need to meet to make decisions together. And it will take place in Azerbaijan, and the EU will be there. And you know that the EU is playing a very strong role to make sure that we have more ambitions, and that we deliver on our promises. And I will have also the occasion to meet with President Aliyev, and we'll discuss the bilateral relationship between Azerbaijan and the EU in all fields, including the fields you mentioned.
Do you think that the Orban presidency brought closer to peace with Ukraine?
Can you repeat, please?
Do you think that Mr. Orban, the presidency of Orban of the EU, is getting closer to getting peace with Ukraine and Russia?
One thing is certain, the EU is strong when we are united, and we have taken the world by surprise. Maybe we have taken ourselves by surprise in showing how we are united in that on that question, on that topic. And you know that there are two tracks. On the one hand, we support Ukraine with more military equipment, with more financial means, with more political support. The EU candidate country, the status recognized to Ukraine on the one hand. On the other hand, there's another political battle on the international stage within the international community, and is the fight in favor of the UN Charter, in favor of the territorial integrity and sovereignty. And many countries across the world, they understand very well, if at the end it's not Ukraine which prevails, it means that we are all more vulnerable, because it means that the UN Charter is not so strong. And I think that this is the main political battle in the years to come. We have to protect, to defend the UN Charter, to make sure that we do not accept any double standards-based approach.
Is Europe prepared to retaliate on tariffs if Trump imposes tariffs on Europe?
Look, this is absolutely clear that we would like to deepen the transatlantic alliance and the bonds with the United States. This is our wish, there is no doubt. But we have a plan for the EU, for a stable, a more prosperous EU, and the plan is called a strategic agenda, and everything is in the plan. And now we have to implement what we have agreed on. In June, the 27 leaders at the highest European Union's level, they decided to make prosperity, security and defense, and engagement with the rest of the world as the main priorities for our common future. We know what you have to do, let's do it.
If he imposes
Please. My conviction is very, very simple. In fact, we have to be more master of our destiny, not because of Donald Trump, of Kamala Harris, but because of our children. This is our responsibility to make decisions so that we are not we are not dependent of something which is decided elsewhere. We have to do more to deepen our single market. We have to do more in terms of competitiveness. We have to do more in terms of European defense capabilities, and with partners, because we want to engage with partners. We believe in a multilateral world with a strong multilateralist base. This is what we believe in.
Mr. Michel.
Very important member state Germany is collapsing right now. What does it mean for all the plans?
Look, we have democratic...
Well, as Charles Michel also actually answering a lot of questions from our Ollie Cook, who's on the ground talking about unity, talking about this is Europe's moment, actually reiterating its support, Europe's support for Ukraine, but we know that even in Europe, that's very split. So let's get back to Christian Keller, Head of Economics Research at Barclays. Christian, we're talking about Germany, and it feels like the future of Europe is really tied to what happens in Germany. They're not, you know, some saying that if Olaf Scholz were to go be succeeded by Friedrich Merz, then maybe, you know, this would be seen as a bolder, more force of nature, a voice in Europe that could counter Donald Trump. I mean, does it also change the trajectory of German economics?
It probably would. I mean, not in the short term, you know, in the terms of demand, it's very much dependent on cyclical forces. And I think the key question is here whether Germany manages to get out of a very challenging structural situation. You know, this is about energy. This is about labor supply. This is about the very different role that China now plays vis-a-vis Germany than it did in the past. And Germany needs to find the answers there. It probably has to do with some structural changes. This is what the current coalition was not able to agree on. And the next coalition, which would likely be a two-party coalition, is very likely to be in a better position in a way to come out with this. Also, I believe possibly the relationship between Merz and Macron may be better than that between Macron and Scholz, even though Macron himself is in not a very strong position at the moment. But, you know, these things do matter in Europe.
What do you think Germany needs right now?
I think Germany needs, if you ask people in the industry, more clarity on the energy policy. You know, what is the concept in a way going forward? Yes, green transition, but, you know, how do we secure base energy in relatively or less expensive energy where it is now? I think there's a big question about labor market. It's not only the demographics that, you know, there's less people at working age, but also people choose not to work as much as they could. That has a lot to do probably with welfare benefits. As I said, not to get too much into party politics here, but if you talk to businesses, it has a lot to do with supply-side economics, which this coalition, I think, has very, very different views on. And the next one could be moving ahead in that respect. And I think that could do a lot about confidence as well. Confidence effects are very important.
Christian, I need to also talk to you about the UK and the Bank of England, because it's also a big day, 25 basis point cut, probably from the BOE. But if you put it in the context of the budget last week, that wasn't well received by the markets. I mean, does the UK have an okay blueprint to grow? You can fix everything with growth, but you need to get growth.
Yes, I think the budget last week was a surprise. It was about a 1 percentage point larger deficit than people expected, and roughly 2/3 of that is current spending and 1/3 is investment spending on the public side. So the latter part, that should be good in terms of longer term growth. The short term, the current spending is unlikely to be lasting. It probably adds, if you think about it, maybe the OBR says 0.6% to growth at the peak next fiscal year. We think it's going to be a bit less. The way they finance that through an increase on the national insurance contribution, all the textbook economics tell you that that's a bad idea, in terms of we think it has a negative multiplier with crowding out the private sector. So, markets, I think, didn't see it necessarily as a long-term growth budget. And the Bank of England now has to think about what would be the impact on inflation as well. We think they will not go overboard. They probably still have in their longer-term forecast inflation falling below 2%, meaning they'll be okay. But it will be very interesting what take they have on the budget.
Thank you so much. Christian Keller, their head of economics research at Barclays. What a day to have you. There's a lot going on, Christian. Coming up, as the world reacts to Donald Trump's election victory, we'll explore what his victory means for global affairs. We'll be joined by Bronwyn Maddox, Director and Chief Executive of Chatham House. That's next, and this is Bloomberg.
Behind the bright lights and adrenaline of pro sports is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I love the fact that you have, we say the cojones, but I can't say that in Bloomberg.
Maybe moxie?
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're an asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. Nobody does that. They say, let's talk about the team.
And so many more.
You need a clap?
No, I think we're here for fun.
Ready? Go.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live every trading day. Balance of Power live around the world every weekday, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua in London. These are your top stories. Investors position for a second Trump presidency, with the S&P 500 notching its best post-election day in history, while his defeated Democratic rival Kamala Harris urges a peaceful transfer of power. Traders now turn their attention to the Fed and the BOE, with both central banks expected to cut rates by 25 basis points. Plus, a shock crisis at the top of German politics. The ruling coalition collapses after Chancellor Olaf Scholz calls for a snap election and fires his finance minister. Bloomberg understands his economic advisor, Jörg Kukies, will replace him. So Donald Trump's relationship with world leaders is set to shape global events. The incoming U.S. president is expected to strain the unity of NATO allies and put the future of aid for Ukraine in doubt. In China, Beijing is braced for a trade fight, while in the Middle East, Trump is likely to reinforce U.S. support for Israel. So let's bring you a view from our reporters in Hong Kong and Tel Aviv now. Let's start with Bloomberg's Jill Dices. Jill, what does another Trump presidency mean for U.S.-China relations and an expanded possible trade war?
Yes, Francine, I think at this point what we're really looking out for to see is, whether Trump actually makes good on some of these tariff threats that he's issued during his campaign against China, the biggest one being that eye-popping 60% tariff on Chinese imports to the U.S. that he's floated there. Now, ultimately, I mean, look, Xi Jinping in Beijing has had a lot of experience, obviously, with the first Trump administration. That's when the U.S.-China trade war began. We've seen under the Biden administration that we've actually had, further intensified, tensions between the U.S. and China. Biden has expanded, curbs on advanced technology and stuff. Now, that's something that, obviously Trump could continue to sort of act tough on China if he wants to do that. But the complicating factor this time around is that Trump, during his campaign, has had a really big backer in Elon Musk, who has significant business ties in China. And so there might be a little bit of a play there in terms of how that relationship ultimately plays out. But we'll have to see as, Trump obviously gets inaugurated, staffs his cabinet, and what that ultimately looks like for U.S.-China policy.
Jill, thank you. Let's also bring in our Israel Bureau Chief, Ethan Broner. So, Ethan, what will Trump mean for the conflicts in Gaza and Lebanon, as well as with Iran?
I mean, I think generally speaking, Trump is going to unleash Netanyahu more than the Biden administration did. I think that the things that have concerned the Biden administration and the region in terms of Israel's military endeavors have to do with humanitarian concerns. And those are issues that Trump has never really raised when he was in office and afterwards. So the sense I have is that there'll be an increased sense of militarism on the part of Israel, particularly toward Iran. Now, that said, I don't think that Trump wants to see wars. I don't think he wants to see oil prices skyrocketing. So my sense is that Netanyahu may move relatively soon on these issues and then work with Trump after January of 25 to sort of create more broader diplomatic arrangements.
Ethan, thank you. Ethan Broner there in Tel Aviv, Jill Dices in Hong Kong, and we'll have plenty more, of course, throughout the day. Joining us now to discuss all of this changing foreign affairs is Bronwyn Maddox, Director and Chief Executive of Chatham House. Bronwyn, good to speak to you. I know you had a big event at Chatham House yesterday discussing the U.S. election. If you focus on foreign policy, what will be Donald Trump's immediate change when it comes to the Middle East or Ukraine?
I think Ukraine is an immediate question. We're going into a very difficult winter there. But I think, for all the things that Donald Trump has said about pushing for a deal, there wasn't going to be a big flow of arms coming from the U.S. again for Ukraine. We could see the reluctance in Congress, even if there were particular reasons that held it up last time, just a big reluctance to keep pouring money and arms into that. And that is something that Ukraine has gradually been bracing itself for. So the question is Donald Trump actually going to push for a deal, a photo opportunity, sitting down with President Putin and trying to come to some kind of agreement? And if he did that, would it be worth anything? For my money, I think it's very hard to see Russia stopping, for example, at the lines that are currently being fought over, if there wasn't a really credible American guarantee for Ukraine's security. I don't think Europe has the firepower to guarantee Ukraine's and its own security against Russia just on its own. So it really comes down to if Trump wants that deal, wants to say that he's delivered peace, Can he deliver American protection for Ukraine? Can he persuade the Ukrainians that they've got enough to begin rebuilding part of their country, even if they can't get back the other territory? And then you've got a big question dangling of whether Europe and Trump should put any weight on what President Putin says in such a deal.
Yeah.
I think it would have more credibility if China came into that deal as well. But there you're talking about something that takes really quite a lot of time and brokering.
But Bronwyn, when you look at actually, you know, some of the things that we're really focusing on is whether some of the European leaders can strike a deal with Donald Trump. So do you take him at face value, or is there, you know, we know that Mark Rutte knows President Trump from his past. We know that President Zelensky reached out as one of the first leaders yesterday. Does that personal connection actually make a difference?
Yes, it always does. It always does. And Mark Rutte was chosen by countries partly reckoning that Donald Trump might get in and that it really mattered to have a head of NATO who could get on with the American president. I don't think Trump will pull out of NATO, but what he will do very clearly is say to European countries, look, you've got to pay more for your own defense. The American taxpayer has been footing the bill for a long time, and he has a point.
What do you think will come to that? Will European leaders again become stronger? Will they hold together, or will Europe splinter?
Europe is strained at the moment, and the fall of the German government, you know, reflects part of that. You've got kind of dysfunction in the grand old French-German engine that made Europe work all these years. And they disagree, for example, enormously on China, where Germany has been saying we don't want tariffs on cheap Chinese things like solar panels and electric vehicles, partly because of the German car manufacturing supply chains that are there. But France wants sky-high tariffs. And you've got a real division there over one of the current wedge issues of European politics. And then each country individually is struggling at what to do about migration. So it's not a very easy time in Europe. But all the same, I think the prospect of Donald Trump in the White House does concentrate minds of how Europe can act together for its greater security and greater communication with the US.
Bronwyn, what kind of leader does Germany need? So we had this crisis with the finance minister being sacked. We could see a very early election, certainly a vote of confidence. If there is a change at the top with a new Chancellor Friedrich Merz, is he the right person to lead Germany, especially in this kind of face-to-face with Donald Trump?
He could be. It really, this is a key relationship. For all that the UK goes on about the special relationship, the German-US relationship is one of the most important ones in a Western alliance. It's not underpinned by enormous emphasis on defence, though that has been growing over Ukraine. But a lot of talk there about trade and just about positioning the EU in relation to the US. So, all I would say is that relationship really does matter, even though it is one often of the more low-profile ones.
Bronwyn, what will you be watching out for in the next couple of weeks? I guess it's how Donald Trump also builds his cabinet and who he surrounds himself with.
So that matters a lot. If you have a president, and let's assume his character, what we know of it remains unchanged from the first. Very, sometimes impulsive, but it matters enormously then who he surrounds himself with and what their agendas are, because it is an administration that will be shaped by that block of people, not just by Donald Trump. I'll be looking out for what he says about tariffs. We've had these very big numbers, like 60% tariffs on Chinese imports. I don't think he can actually do that without that, bring Chinese imports into the US almost to zero, and I don't think that's really practical. But what really is going to come out of that, what's going to come out of that for the rest of the world, that's a huge impact on markets and the dollar. And I will be looking at for what happens in the Middle East, particularly what Benjamin Netanyahu, the Israeli Prime Minister, chooses to do. And whether the Biden administration, which is still there for 2.5 months, what it tries to do to promote its preferred version of the future, which includes a deal with Saudi Arabia.
What should President Xi do right now?
That is such an interesting question. I think China is going to be pretty cautious about this. It will want to see what is going to emerge. What is going to emerge on tariffs, on climate, and particularly it will be mulling over this statement of Trump, where Trump is absolutely consistent in saying, I don't want wars. He prides himself on there being, in his book, no new wars in his first term. So China will be bound to be thinking, what does that mean for our aspirations of taking control of Taiwan? Could we count on a US president not wanting a war if we did that? But I think generally China is on a campaign to see whether it can recruit more countries in the world to its view of things, its way of ordering the world. Not necessarily antagonistic to the US, but definitely its side of the vision of how countries should get on with each other, and not in the old American, if I say the word liberal, I mean in the old post-war kind of emphasis on individual rights, so on. So it will be just looking to see what it can make for itself out of the new alliances in the world.
Bronwyn Maddox, thank you so much for joining us, Director and Chief Executive there of Chatham House. Coming up, the Bank of England is set to cut rates later today with last week's UK budget and Donald Trump's return to the White House clouding the outlook. We'll get a preview next, and this is Bloomberg.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Hey, ChatGPT.
Hello there. How's it going?
It's going really well. Today, I'd really like your help solving a math problem.
I'm all ears. What math problem can I help you tackle today?
So I'm going to write down a linear equation on a sheet of paper, and I'll show you. And then I'd love your help working me through it. But importantly, don't tell me the solution. Just help give me hints along the way.
Got it. Okay, I see it.
No, I didn't show you yet. Just give me help along the way. 1 second.
Whoops, I got too excited. I'm ready when you are.
So, ChatGPT, What equation did I write down there?
Ah, I see it now. You wrote down 3x plus 1 equals 4.
Yep, exactly. So what's the first step I should take to try to solve this?
The first step is to get all the terms with x on one side and the constants on the other side. So what do you think we should do with that plus 1?
Okay, I'm going to try to subtract 1 from both sides, and then I'll see what I get.
Great idea. Perfect. Now, what do you get when you subtract 1 from both sides?
Okay, so ChatGPT, this is what I ended up with. How does this look?
Spot on. Now you've isolated the term with x on one side, and it looks like 3x equal 3. What do you think we should do next to solve for x?
I'm not sure. Can you give me another hint?
Of course. You have 3x, and you want to find the value of x. Think about what operation would undo multiplication.
Is it subtraction?
Close, but think of the opposite of multiplication, because 3x means 3 times x.
Okay, I think it's division. Let me try to divide both sides by 3, and let me see what I get.
Bingo! Go ahead and divide both sides by 3.
Okay, so ChatGPT, this is what I ended up with. How does this look?
It looks perfect. You've solved it, and x equals 1. Nicely done. How do you feel about solving linear equations now?
Yeah, honestly, I'm now pretty confident I can solve linear equations, but why would you ever need to use this in the real world? I'm really skeptical.
That's a fair question. Linear equations pop up in a lot of everyday situations, even if we don't realize it. For example, calculating expenses, planning travel, cooking, and even in business for profit and loss calculations. It's basically a way to solve problems where you need to find an unknown value. Plus,
wow,
it's...
okay. You know, I have a lot of unknown values in my life. I'm totally convinced I'm going to learn math now.
I love that attitude. Math can definitely help solve some of life's mysteries. Whenever you're ready to dive into more math, I'm here for you. Anything else you'd like to tackle today?
So ChatGPT, I really love that you taught the value of math to my friend Mark. And I wrote one last thing I'd love if you could take a look at.
Of course. I'd love to see what you wrote. Show it to me whenever you're ready.
Okay, so this is what I wrote down. What do you see?
I see. I love ChatGPT. That's so sweet of you.
Yeah, well, I really appreciate all the help.
Given that kind of that's sort of where the narrative has been going.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
We are kind of seeing sort of sterling looking less sure of itself. The euro actually did very, very well against the pound last month.
Okay, Rachel, thanks so much. Rachel Evans stays with us because we'll talk a lot more about the Fed coming up and what it means for dollar dynamics. Let's discuss some of the big European movers this morning, as well as the impact of Trump's election on European stocks. Our equities reporter, Joe Easton, is here. So, Joe, what are you watching this morning?
So we have got some pretty sizable moves in European stocks this morning, Fran, and the biggest ones are all in the reds. Take a look at Air France, down the most in 2 years after results from the big French airline. Now, their costs jumping according to their statement. Most of this is due to higher wages. Now, bear in mind that stock is already down around 40% this year, given they have seen some weakness in their fares and disruption from the Paris Olympics as well, so hit pretty hard there. ITV in the UK slammed on some weaker than expected ad ad revenue. That's according to analysts. They had a statement out this morning as well. And in payments processing, this is Adyen. It's the company where you tap your card on the payment machine. And that stock dropped around 15% at the open. They've seen a big slump in some of their transaction volumes, one of the worst stocks on the Amsterdam exchange today, but actually coming up a bit. Again, it's a stock that has derated already quite a lot. And Novo, I've been chatting to traders about this one all morning because it was weaker. It was down almost 5% over in the early trading in Copenhagen. They did have results yesterday and an earnings call, not enough positivity around those weight loss drugs, which has sent that stock flying, of course, but that giving up some of those gains today. And then I was also looking at the renewable stocks because remember, this sector hit really hard yesterday as Trump won the US election. There's worries that he will potentially roll back a lot of the offshore wind projects. He's not a big fan of wind, Donald Trump, so he thinks that we might see a bit of a decline in some of the projects on these. Bank of America out today downgrading a lot of their ratings on these stocks, saying things won't get any better anytime soon under Trump. They think that there will indeed be a drop down in some of their orders. They do actually cut Siemens Energy today, and they've got an underperform on Vestas. All of those pretty much trading where they were yesterday, big declines on two-day basis.
Joe, thanks so much. Joe Easton there with stocks to watch. Coming up, traders turn their attention to the Fed for any clues on how Trump's potential tax cuts and high tariff policies will impact its outlook. We'll get the latest ahead of the central bank's decision later today. This is Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto.
This spirit of we'll figure it out is my favorite thing to hear among early startup team members. A lot of things go wrong. The situations that startups win in tend to be incredibly dynamic. And so this idea that even if I'm not qualified on paper, even if I haven't solved this problem before, even if this problem feels like it's going to kill the company, which many problems will feel that way, this spirit among the team of, you know what, we've got the people we need, we're going to figure this out, we're going to get this done, that's super important. Another thing that I love to hear from early team members is, I've got it. So, you hear in big companies a lot, people say, that's not my department, someone else is going to do that, or, ooh, this is really bad, this is going to hurt us. And you want people who just step up and say, I'll do it, I've got it, don't worry about it. You want people that have a bias towards action. Startups, especially in their early days, often win by moving very quickly. You never get as much data as you'd like. You never have as much time to deliberate as you'd like. And you want people who are willing to act with much less data than they like to have, with much less certainty. And then if they act and it doesn't work, they adapt really quickly and try something else. We talk also about the blessing of inexperience. We have seen many of our startups do incredible things because no one told them it was hard, or no one told them they can't do it. There's a great quote from Steve Wozniak about how all the best things he ever did came from having no experience whatsoever and having no money. And, you know, that obviously is not always true, but there is a magic thing that happens with startups, especially in their early days, before they've learned they're not supposed to be able to do certain things. And so I think as a startup, again, it doesn't work to have everybody be inexperienced, but you can take more bets than you normally would on inexperienced but super high potential people. That's the end of the topic on team. One of the most important jobs you have as a founder is to never lose momentum. And this is a little bit depressing because it means for the first few years, you never get to take your foot off the gas. You never get to really rest. We try to be honest about this, that startups are not the best choice for work-life balance at all, but especially in the early days. Startups survive on their own momentum. If you have momentum, people keep delivering results beyond what they think they're capable of. If you lose momentum, it's very difficult to get it back. And so continuing to make sure that the startup has a cadence, that the startup keeps winning on a relatively short and predictable intervals, this is really important, and it's up to the founders to make sure that you don't lose a hold of this. Another thing that we think startups need is a competitive advantage over time. Now, this is something that sounds so obvious, I hesitated to even put it in. This is well discussed, but we're seeing more and more startups apply to YC, and when we ask them, so what is the long-term monopoly effect here? What is the long-term competitive advantage? What is, where is the network effect in this business? They look at us like it's the first time they've ever heard this question. All of the really great businesses I know have an answer to this question. And in fact, the better they are, the more they pretend not to. But this is something that you want to have a plan for. Another thing you want to have a plan for is at least a sensible business model. You don't have to have it all figured out at the beginning. But when we ask founders, so how are you ever going to make money? And they look at us like it's the first time they've ever been asked that question, which happens more often than you would think recently. That's a bad sign too.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
Without having to upload your data to the cloud, and you will be able to do it anywhere in the world. And also for applications where speed is important, where latency is important, you will be able to do it locally much faster. For example, in gaming, where the game needs any resource the computer have, it will be a much better model. So it's going to be a big change starting this summer.
At the same price, too.
Slightly higher price, but if we look at the increase of price versus the increase of value, not comparable.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
other authorities.
Could face bigger challenges. Britain's next.
It was going to keep rain World Cup. This is a 3.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Good morning from our global headquarters in New York. I'm Manus Cranny alongside Danny Berger. You're welcome to Bloomberg Brief. Let's set that agenda.
Record rally holds. The Trump trade kicks into high gear as markets assess his return to the White House. Near a trifecta, Republicans close in on a red sweep with the House in play after gaining back the Senate. And a Fed set to cut 25 basis points as the path forward remains clouded by politics. Good morning, Manus.
Danny, a very good morning. It felt like a freight train of FOMO ripped through these markets yesterday. And as politics is going to be the alpha of these markets, if it is a red sweep, how much more of a roaring 20s narrative will you get in equities? We put in the Russell 2000. Hamas to yourself. Small caps ripped it away yesterday, up over 5%, ignoring the screams, I think, of, as they say, the bond vigilantes. Records after record. Post-election day, the biggest in history for the S&P 500, the 48th record this year. Roll it over and have a look at the screaming vigilantes. Or are they just the birds that are in charge at the moment? That's what we need to sort of disaggregate. This move in the bond market, it was a depth charge yesterday. You saw moves between 9 and 17 basis points across the curve. The 30-year auction had a pretty good bid to cover ratio on election day, 2.64 times cover to 2.37 previously. So there's some brave people out there by long duration.
Well, for everyone that felt a sense of surprise, at least today will bring less of a surprise with the Fed set to cut 25 basis points. But if you're Fed Chair Powell, you'd probably say literally nothing, right? You deliver 25 basis points. They don't have to give a summary of economic projections. He's going to get asked question after question about politics. If I were him, I'd just, kind of shuffle my papers, save the prepared thing, and say, goodbye, folks, and get out of there.
We'll give you some reassessment at Christmas. And I think we're possibly going to know more about the complexion of who's in the Trump administration. And I think, Danny, that's going to be critically important. If it is a Lighthizer advisor, you've got some form to go on in terms of what the tariff narrative might be, and that tariff narrative has a very, very direct potential consequence on inflation here.
Well, to be fair, a lot of his advisors, from Scott Bessent to Peter Navarro, have said, look, this is something that will be phased in, and we're going to give countries a chance to respond and open up their markets. So you might not get the worst of what's feared with tariffs, just given some of the language you're hearing from advisors.
Yeah, I think we've gone from shock and awe, Trump 1. Let's see whether it's reconciliation and negotiation, Trump 2. That is all to play for. But we have the Vice President, Kamala Harris, delivering her concession speech on Wednesday afternoon from Howard University. Here's what she told her supporters.
The outcome of this election is not what we wanted, not what we fought for, not what we voted for, but hear me when I say, the light of America's promise will always burn bright. As long as we never give up, and as long as we keep fighting.
Strong concession speech there from the Vice President. Derek Wallbank joins us now to assess the landscape of politics. Derek, it looks like, as we said in the headlines, a trifecta, potentially a red sweep for the Republicans. And the question is then, what is unchecked Trump 2? What is ground zero? Is it on the tax and the fiscal, if it is a red sweep?
Well, Manus, look, there are a couple of things that Donald Trump can do without having to worry too much about Congress, right? Tariffs are one of those things. He has a favorable Senate right now, so one would assume that he will be able to put into office the sort of people he wants to put into office. Now, taxes are one of those things that you can get through in Congress if you really try without having to worry too much about a filibuster. There's a process called budget reconciliation. I'll spare you the details, but endpoint is that you may not need to find 60 votes for it. That could be really important for Donald Trump. And indeed, we are staring at a possible tax cliff on the personal side. Trump has made an awful lot of promises about things that he wants to do on the tax side, how he could get most of those, all of those, some of those through. I think that's going to be a really big question. You mentioned the tariff part. That was a signature part of Donald Trump's first administration, right? And so that's going to be one of the things that I think is immediately in play. The other thing that I think that's going to be in play a little bit, and you mentioned it talking about Jay Powell, is to what sense does the administrative state of the United States allow Trump to do what he wants to do? Certainly one of the reporting notes that has been made in the campaign coming up is that there will be far fewer people around Donald Trump trying to constrain him. And as I recall, going back into the tariff fights and the first trade war, if we were to have another one again, is that the Fed tried its level best during that time to minimize the impacts of that. They did brook some criticism about that to say that maybe that focus on the short term was actually encouraging to Trump because it minimized some of the damage. But we did see a Fed that was trying to make sure that if that was the path that the president went down, that it wasn't quite as damaging to the economy.
Well, we also remember in the first Trump presidency, you had people like Gary Cohen who had resigned, disagreeing with certain things like tariffs, for example. Derek, what do we understand about how the team around Trump might take form and what that means about his policy going forward?
Yeah, you've got a couple of people that I think are worth thinking about here, and the two people that your mind most goes to is Linda McMahon, the WWE former co-founder. That's a different company now, but Linda McMahon is one. She was in Trump's administration the first time. Cantor Fitzgerald's Howard Lutnick is also helping lead that transition. We're looking at possibly John Paulson is one of the names that's been mentioned around the Treasury Secretary role. Marco Rubio is one of the people. Rick Grenell is another who have been mentioned around the state role. Scott Bessent, you saw his name on the screen, was one of the people floated around maybe for Treasury. That's all going to get figured out in the coming, let's say, days to weeks. Lutnick and McMahon are going to play a very huge role in figuring that out. But I think some of those big name positions are going to be places where Trump is going to want to put people who have a certain amount of gravitas in the subjects that they cover. At the same time, there are a lot of people who I would describe as maybe ride or die Trump folks who are also looking for roles in his administration. And so one of the really critical questions is going to be, to what degree do they get positions? What sort of influence do they get? And remember, this is the difference between having a Republican Senate and a Democratic Senate, and maybe between having a lightly Republican Senate and a big one, is that you can get through the people that you want. Right. And so some of those constraints on Trump getting who he wants may not actually be there this time.
Yeah, a really good point. Derek, thank you so much. That is Bloomberg's Derek Wallbank. Now, the epicenter of the market reaction, just in terms of volatility, take a look at the past 2 days for dollar MEX. The peso sells off hard, significantly, when it seems like Trump is going to be the president. And indeed, you get that. The president-elect Donald Trump, and the peso at one point weaker by 2.5% versus the dollar. And then something changes. Over the past 2 days, the peso actually stronger versus the dollar. Joining us now is Jane Foley, head of FX strategy at Rabobank. Jane, this has been seen as a plain and simple tariff trade, and then something happened yesterday. What do you make of it?
Well, of course, we all know that over the last few years, Mexico's become the US's largest trading partner. And then, of course, there have been, as these different trading groups are developed. So you have the China trading group and the US and its allies trading group. We all know that there are countries such as Mexico and Vietnam who've actually been benefiting from that. There's been a lot of whispers, a lot of anecdotal evidence that there's been a lot of Chinese FDI into Mexico as Chinese producers try and export into the US through the back door. And there's been speculation for a long time that both Harris and Trump would try and push back against that. Now, this is what the the Mexican peso has been reacting to fears, of course, that there would be a big pushback against particularly Chinese FDI and Chinese companies producing in Mexico. But more generally, we saw Trump, threaten John Deere against moving some of their manufacturing facilities into Mexico. He wants manufacturing to stay at home in the US. So the Mexican peso was trying to find its sort of natural place. How worried should it be about the potential for tariffs, or actually can it carry on making good and making the most of the fact that it is one of these sort of transition currencies that's been sort of avoiding this tension between the US and China?
Well, maybe that relief came in that obviously if there's growth in America, maybe it has some stability effect. The president, Sheinbaum, calling for calm and, of course, releasing photographs of herself and Larry Fink. Let's go to the yuan, because it made the lows of 2023. I mean, ground zero for tariffs and political angst is peso and the yuan. I look at what the Chinese did today, the weakest. They went with a clearing, a fixing today, which was the weakest since 2023. I get the sense they're front-loading themselves and moving on this yuan, but that has political issues. It could really irk Trump if they depreciate too much.
Well, certainly, and we know politically that the Chinese authorities, they don't want to have a significantly weaker Chinese renminbi, so that there is that from the politics. But of course, the economics would potentially call for a softer renminbi, given the economic backdrop in China. Now, we did see export data from China being pretty strong, and that is, of course, the assumption that lots of companies were sort of front-loading their exports ahead of the potential from tariffs from the US. So we are going to see some messy data from China because of the political situation, and certainly we are likely to see more stimulus. And we have had indications from China that if Trump were to win the US presidency, that stimulus could be greater, because, of course, they are, of course, concerned about the impact on China from these tariffs. But of course, China right now is coming from a very weak base. We know about the property sector, we know about these huge debts, we know about the weakness of consumption, for instance, and we know that FDI has been affected in recent years into China. So it's from a weak base, and I would imagine, that a lot of investors are going to be very wary about China at this point. So I think there's a lot to be concerned about for China, and of course, therefore, for the renminbi.
It's a great example, Jane, of elections have consequences, and the consequences have been far-reaching in FX. We've already talked about dollar mex and the yuan. The euro really also under pressure yesterday, the dollar having its strongest gain against the euro since 2016. Immediately yesterday, Jane, you had Goldman Sachs come out and cut their 2025 forecast for the Eurozone from 1.1% to 0.8%. Do you also expect weaker growth from Europe, maybe more rate cuts, maybe something that looks more like dollar parity with the euro?
I've been talking with our clients that parity is a realistic option. It's not in our forecast table right now, but it is realistic, and I do have a lot of sympathy with that view. And we've got to remember here, there's two separate branches of facts here. We've got the stronger growth projections potentially under Trump, the more inflationary outlook, and the possibility of less interest rate cuts from the Fed, which of course is dollar supportive, at least through 2025. And then we've got the Eurozone fundamentals as well. We've had now the bad news about the German coalition government collapsing. That, of course, adds to the weight of these stagnationary conditions that Germany's been suffering for some time. And of course, over the last month or so, we've had change in the ECB, more focus on growth, because there's more confidence within the policymakers that inflation is potentially back in its box, or at least it could be in the middle of next year. Now, I think that potentially exposes the euro a lot more to these weak fundamentals of Germany, the weak fundamentals of France as well, given its budget outlook. And so we have these two stories. We've got the independent story of Trump and maybe dollar strength coming from those pro-growth fundamentals in the US. And then we've got a Eurozone more focused on the weak growth story, and therefore the market taking more account of weak German fundamentals.
Jane, we've got through this entire interview without talking about the Fed. Very quickly, as quickly as you can, 25 today, and then a pause. And I just wonder, what level of FOMO do you have in the dollar? Is that ultimately what drives us forward here? A pause from the Fed and a red sweep?
Well, we think that there's every reason to worry that the Fed's easing cycle could all be over by January if we get a red sweep. And that, of course, is going to be supportive for the dollar.
Jane, succinct, perfect. Thank you very much. Jane Foley there at Rabobank. There are other stories trending on your Bloomberg terminal this morning. Let's get you through some of them. The German Chancellor, Olaf Scholz, calls for a confidence vote and a snap election. The move comes after his surprise dismissal of the finance minister, Christian Lindner. Scholz's coalition collapsed over plans on how to revive the economy. Opposition leaders are calling for a confidence vote as soon as next week.
And the German president says that he's prepared to dissolve parliament if requested. Also in Germany, people familiar say activist investor Elliott has built a sizable stake in RWE. Elliott has already called on the German utilities giant to consider a share buyback. Elliott declined to comment on whether it has any holdings and has denied that it is engaging with anyone at RWE in relation to an investment in the company.
And growth in China's exports jumps to a 2-year high. Exports rose more than 12% from a year earlier. The surge is partly driven by exporters trying to front-load the shipments ahead of the holidays and the looming higher tariffs.
Coming up, Qualcomm rises, ARM falls. We're going to look at how the smartphone industry is making an uneven comeback.
A little bit later this hour, we'll discuss the upcoming Fed decision with Steve Risciuto of Mizuho Securities right here on Bloomberg Brief. Good morning.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Brief. I'm Manus Cranny alongside Danny Berger here in New York. What have we got? A bit of a wobbly comeback?
Yeah, wobbly comeback, a great way to describe it in the smartphone industry. Because you had Qualcomm, you can see shares there, pre-market up 8.5%. They had a rosy sales forecast, but ARM down 6%, gave a tepid outlook. Joining us now is Bloomberg Daybreak Europe anchor and our tech expert, Tom McKenzie. Let's start with Qualcomm. Tom, I mean, good signs for this smartphone market coming back.
Yeah, look, both these companies are bellwethers, aren't they? And both, in fact, beat in terms of the most recent quarter, in terms of the earnings. But it was the forecast going forward where there was that divergence. And on Qualcomm, they gave that more upbeat forecast, certainly than ARM did, and that was the expectation. Or at least that was a reaction from investors. You're seeing that pre-market, of course. They expect, in fact, revenues to come in above the range than estimates had expected for the current quarter. So they're looking, Qualcomm, at revenue in the current quarter coming in above $11 billion. Estimates had been for around $10.5 billion, so that was positive. positive. They have big exposure, of course, to the Chinese market, and they've seen a big tick up, interestingly, in terms of sales to Android devices. They supply some of the most popular smartphones in that market, and they saw that segment, Android phones, increasing 40% in the fiscal year. They're also making some success in terms of supplying chips into the auto sector as well. That was another number that jumped out for Qualcomm in terms of the demand and the sell into the auto sector. That jumped 70%. So they're trying to get a more divergent play here into devices, into the auto sector, as well as into smartphones, where they still get about 60% of their revenues. So they beat in the first quarter, or at least in the most recent quarter, and their forecast for the current quarter came in better than expected for Qualcomm. Again, a gauge in terms of that demand for smartphones, particularly the high end. So it does seem to be modestly starting to pick up.
We only trade in the high end on this show, Tom. Only on the high end. Rene Haas, the language that he's using over at ARM. We're not trying to get too far ahead of our skis. It's a great line because it tempers the expectation about the diversification trade within ARM, doesn't it? From the traditional phone chips to those higher quality, let's say higher yielding data center product.
That is exactly what it comes down to, Manus, because they are too exposed. He knows this, Rene Haas knows they're too exposed to the smartphone market, and they are trying, and he's been driving hard at trying to diversify in terms of their customers, particularly when it comes to data centers, particularly around building out solutions for their customers that are more well-rounded, meaning they'll get more from licenses rather than royalties that tend to be slightly lower profit margin. Again, the current quarter, the most recent quarter, I should say, they beat ARM, but it's looking forward to the current quarter where the expectations didn't meet the estimates for this company. The AI play is there for them. They want to be there on the edge, so in terms of those smartphone devices, but also, of course, in terms of the data centers. And Rene Haas basically saying, look, this will take time. We are that essential component within the AI play, but it is going to take time. They maintained their forecast, by the way, for the current year. Annual forecast, they see sales of up to $4.1 billion for ARM.
Okay, well, they take a little bit of a chunk out of them this morning, down over 5%. Tom, thank you very much. Tom McKenzie on the tech trail. Coming up in the show, what else is making headlines around the world? We're really beginning to assess politics day 2, but also a $50 million bet on Donald Trump. Who won? This is Bloomberg.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in.
You know, Steve was a teacher. He taught me the value of focus, the importance of simplicity, the fact that making things simple is so much harder than making things complex. For those of us that were fortunate enough to work with him, he was the teacher of a lifetime. My first job was delivering papers. And I was about 12 years old. Everybody was sort of expected to work in my family. And I'd get up at 3 in the morning, pick up the stack of papers and start throwing. And usually come back and take a nap before school. Throwing papers helped start my college education. And I was the first person in my family that went to college. I knew that being able to do that was a privilege that I needed not to waste. Everyone saw college in those days, and hopefully today, as opening many doors and being able to stand on the shoulders of your parents, that education would do that.
Changes everything.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
Exactly what the role RFK will play.
Yeah, he certainly wants to slash a lot of things. Finally,
yes.
This on the Wall Street Journal, the mystery whale, the Trump whale, who is in Polymarket, has made $50 million. He's just known as Theo. We know that he is French, but again, yeah, $50 million. He also bet that he'd win the popular vote. We don't know the outcome of that yet. The reason he won, I think, is really interesting. He basically said the neighbor method, basically polls that said, what do you think your neighbor will vote for, skewed more towards Trump. And he said, hey, I think that's more telling. But again, this guy's an upholsterer. He's just like a finance guy in France.
Well, he's going to be a very rich finance guy, and he can sort of go sur la
Maybe
plage.
now a retired finance guy.
On the Côte d'Azur. The billionaires of the world did well yesterday. $64 billion for the world's richest people. And guess who made the most yesterday? $26 billion. Elon Musk. There you go. Relationships matter, Danny.
These are the people who are probably equally happy as Trump that Trump won.
In 2015, I was not optimistic because nobody was working on the hard problems. The energy R&D budgets had gone down. The venture investing in climate had gone down. It was completely out of fashion. So I don't know what people were optimistic about then. The fact is, we built essentially from scratch, you know, with lots of supporters, a really mind-blowing level of innovation against emissions. And, you know, in the last 9 years, that's gone better than I would have expected. So only now could you even, you know, plausibly be optimistic about the path of emissions. And someone who said, hey, nobody's ever scaled things up very like the speed that we knew to before, they're welcome to say, hey, I'll believe this when I see it. You know, in the meantime, some people who care about this issue are really out, you know, trying to think, do we need permitting reform? You know, do we find, what new ideas haven't we found yet? You know, how do we fund people with those new ideas. How do we get the costs of these things down? How do we collaborate on a global basis? So we're still not at the point where it's guaranteed or even that it'll be easy, but at least there's a theory of change.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the From our global headquarters in New York, welcome to Bloomberg Brief. Danny Berger and Manish Krani, let's set your agenda.
The record rally holds. The Trump trade kicks into high gear as markets assess Trump's return to the White House. A near trifecta. Republicans close in on a red sweep with the House in play after gaining back the Senate. And the Fed is set to cut 25 basis points as the path forward remains clouded by politics. Danny, good morning.
Good morning. Well, all that happened in the past 48 hours, a seismic event with implications throughout assets. 48th record high for the S&P 500. Small caps have their best performance since November of 2022. The KBW Bank Index had its best day since November 2020 when the Pfizer vaccine was announced. We continue gains this morning, though more tepid than where we were at this point yesterday. Meanwhile, for the bond market, again, some of the losses relaxed. Where your 10-year yield yesterday, that rose 16 basis points. 30-year yield goes 17 basis points. The dollar had its strongest gain against the euro since 2016. Again, it's a little bit weaker this morning, the dollar that is. And Bitcoin, Manus, that closed at an all-time high.
I mean, there's a fury to some of these trades, but there was a rationale. I mean, if you go back 24 hours, we had Mohamed El-Erian on surveillance, and he said there's a rationality to these markets. They are behaving in a rational way, not a rational exuberance. It is perfectly rational. You have exceptionalism, and to that end, then you need to disaggregate between roaring 20s, or is it just a temporary melt up until we see some of the size and shape of the policies?
I have to say, I'm surprised how orderly it was to see yields go up 20 basis points and risk assets just absorb it. They were fine. It was a rally in everything to the point where even the peso ended the day stronger. I think that's extremely telling.
And then this gives you some perspective. It's a growth narrative, perhaps, rather than an inflation narrative that is the alpha at the moment. I know that this can all change because the screaming bond vigilantes did nothing to wound, you know, the sort of the salad-eating equity traders.
Well, we'll see if a red sweep changes that. In the meantime, we have some central bank decisions to get through. We have the Fed, and we also have the Bank of England. Now, when it comes to the Bank of England, they're widely expected to cut rates by a quarter point today. Sound familiar? Fed's expected to do the same. But the release of the UK's budget last week and Trump's victory, all of that casting new uncertainty over future policy. Joining us now is Bloomberg UK correspondent Lizzie Burden outside of Threadneedle Street. Lizzie, set the scene for us. What do we expect today?
Well, as you say, that quarter point cut pretty baked in, given that inflation is back below the BOE's 2% target. So the focus on the path ahead. Rachel Reeves, the Chancellor, throwing a spanner in the works with the budget because it was the biggest fiscal loosening in decades. So traders paired their bets off the back on BOE cuts. But then you had Trump's victory, and you can debate what the economic impact will be, but very simplistically, if there are tariffs, that could stunt European growth. But if there's a fiscal response, that could be inflationary. It'll be interesting to see how Andrew Bailey weighs these factors. He was dropping all of these hints about more aggressive policy to come, but that was under the cover of the 50 basis point cut from the Federal Reserve. And it clashes with his chief economist, Hugh Pill, who's been more cautious. So we'll listen to Bailey and we'll look at the updated forecasts. Do they upgrade the view on inflation and growth post-budget? It's too soon to be factoring in the US election, But even then, this will be based on a pre-UK budget yield curve. And you remember the gilt market reaction to Rachel Reeves's announcement. And in fact, because of the increased borrowing costs, the headroom she left herself has been wiped out already. So at this point, it looks inevitable there'll be more tax rises. We'll listen to all of that. At the moment, markets are pricing a 1 in 4 chance of a December rate cut, fully pricing 3 cuts next year. Let's see how that changes. I reckon the tone today will be all about the uncertainty.
Okay, Lizzie, thank you very much. We'll count down to that announcement. Lizzie Bowden there outside the Bank of England. Right here in the United States, the Fed is expected to continue its rate-cutting cycle when it announces its decision at 2 p.m. Now, it's expected to cut by 25 basis points. Rachel Evans joins us now. Apparently, this is the easiest job in the world, according to the president-elect. You turn up once a month and you just flick the old coin. Rachel, it's almost a shoe-in for 25 basis points. Powell just wants to get off and out the door without any injury about commentary of what next year might look like.
Yeah, I think that's going to be the big challenge for him, as he is undoubtedly going to get pressed in questions, not just about the state of the economy, but just about how he feels about working in an environment where Donald Trump is president once again. So obviously, as you mentioned, we're going to see that 25 basis point cut almost a lock, but there's going to be a lot of discussion about what the path of interest rates looks like once Trump takes the reins. There's been discussion in markets about whether his policies are likely to be very inflationary, just given kind of the outlook for tariffs and also for tax cuts. So we're likely to see some questions about whether that could push up CPI and how that would influence potentially keeping interest rates higher for longer. There's also potentially going to be some queries around the latest jobs figures. We did see a non-farm payrolls report for last month coming back very, very weak, largely as a result, of course, of those strikes and hurricanes. But there's going to be some questions to answer about whether that suggests any sort of more systemic weaknesses emerging in the labour market that might require the Fed to move more quickly with rate cuts. So it's going to be interesting to see how he kind of sort of deals with that footwork he's going to need to kind of balance between sort of the outlook for the economy at the moment, just given sort of that backdrop, and then the outlook under that Trump presidency.
Rachel, thank you very much. Setting the scene there, Rachel Evans for the Fed. Our guest this morning is Steve Risciuto, Chief Economist at Mizuho Securities. Steve, good morning. Welcome to the show. Get any sleep at all in the past 24 hours?
Last 24 hours, yes. Prior to that, now.
I think I heard your alarm go off to wake up about 10 minutes ago.
I did. I unfortunately just made that mistake. I apologize.
Not at all. It's good to know that other people have a normal life and they're waking up just as Danny and I are doing the 5:30 headlines. Now, look, there's a freight train has been driven through risk. You can decide whether that's FOMO or embracing U.S. exceptionalism. And we were just chatting in the break. How does this evolve from here? Does this evolve because of policy? And is there any guardrail on policy that Trump and this administration can administer? Because the one thing, as you say, that came through was, yes, the economy was top of the agenda, but it was gas and groceries that were the killer for the Democrats.
Yeah, I think the real message out of this election is if you're trying to craft an economic policy that addresses the concerns of the American population, which clearly throughout one administration has taken in a totally different administration, is you got to look at what was the real root cause. It wasn't an economy running below trend. This economy is running well above trend. It's not a weak labor market. This economy is running at full employment. This has an economy that has a Federal Reserve that wants to support full employment. It really was an economy that was addressing the overall hike in prices and the reduction that that's had on real discretionary disposable income of households. And how do you address that? And the answer is you either address it by pulling back demand or you address it by increasing supply. The concerns I have is most of the proposals that were advanced on both sides during this campaign were demand-driven, not supply-driven. How do you address the supply considerations? That's an important development. And to be honest with you, the Reagan-esque supply-side related tax cuts, I mean, we can argue that to death whether that really worked or not. It's not definitive whether it actually worked in that direction. There was an excess supply situation that exists in the world today, and it's a function of very different factors. And I think that's the one thing that they really should rely on, which is allow this economy to do its work itself rather than trying to correct it for it.
It's probably not what we're going to get, though,
No.
considering what we've heard from Trump. And tariffs is a great example of policy that many have pointed to, saying this is inflationary at a time when the top issue, to your point, are prices. You made a really good point during the break, though, that in 2016, the tariff policy wasn't necessarily that, and producers were happy to eat some of those margins. Will this time be different?
Well, I'm not so sure it will be. That's one of the key things. I think people are totally ignoring that factor. Back in 2016, you had a much stronger Chinese economy, you had a much stronger European economy. When you look at where we are today, it's a much weaker global economic backdrop. In particular, it's a much more hollowed out China. It's a diversified supply chain. We've actually created more excess supply of tradable goods. So there's a greater potential for some of this to be eaten up in terms of margins. The other thing is, let's understand, I don't think he's going to come in on day one and try to, use all these tariffs effectively. I think he's going to use them as a negotiating tool to try to get what he wants. In particular in Europe, I think he wants Europe to shoulder more of the cost of the situation in Ukraine. Again, that's something that can be done, and can it stave off some of these adjustments? Earlier, there was a conversation about what's going on between Chinese manufacturers moving into Mexico and the impacts that that could have. So there are things that can be done, in particular Mexico closing off its southern border so we don't have all the pressure at the United States southern border. The Mexico southern border is a lot smaller than our southern border. So there are things that can be done to avoid these taxes, and these tariffs, and I think that's the negotiating play.
And maybe he has to use some negotiation with Congress when it comes to getting his tax extensions through as well. It just depends whether he takes a hold of that. Can we just reflect for a moment? We've got Fed coming down today. 25 basis points is the assumption. It's really what happens after this with projections and tariffs. But if I look back at 2016, it's not 2016. We've got higher interest rates. We had a global manufacturing recession then. And there's not as much capacity in this economy to really take any more alpha. So are we already in a policy error? Should this economy just, in your words, allowed to do its own thing now without the Fed? Should the Fed go into a pause mode after December?
Yeah, we were never an advocate of the Federal Reserve having to cut rates as aggressively as everyone else. Our view has always been that the neutral Fed funds rate is 4%, not 3%. There's a 100 basis points difference right there, number one. And number two, we've been sitting there saying, you've got an economy that's running above trend. Why do we think this economy doesn't need this level of interest rates? So we do believe there will be a much slower pace of rate reductions than the market has anticipated. And we think the terminal rate that we'll get to at max will be 4%, and we're not so sure we ever get there. We might wind up cutting this rate reduction cycle off much shorter than happened. This is exactly what happened to Greenspan in his, mid-1990s soft landing scenario. It was a series of small rate cuts followed up by a couple of increases, followed up by a couple of cuts. It's fine-tuning around the margin, and I think, this Fed has to wake up to the roses as well, that they've got an economy that is running at full employment. You're targeting full employment. Well, you're there. What are you trying to do?
But in the vein of elections have consequences, all these conversations, though, now need to be colored by the politics of it, which I'm sure you're thrilled about, Steve. If you have Trump, who does try to replace Powell, with someone who's willing to do his bidding, that in the face of higher spending, tax cuts, continues to cut rates, is this something that the market will push back again? Does this have a check if Trump tries to do something like that?
Well, I think we have to understand the nature of the Federal Reserve can lay out the situation where the chairman doesn't have as much power as we think. That's number one. Number two, you look at the FOMC minutes that came out last time. There was clearly a lot more dissension in that meeting than came out in the post-meeting press conference. So clearly this was a Powell decision to move towards 50 basis points. And again, to some extent, it's his mess. He has to clean it up. And I think that's one of the key things. The bond market hasn't liked it from day one. And most of the deterioration prior to yesterday was not the Trump trade. It was monetary policy decisions. So I think the chairman faces more internal resistance than people think. And I think, now you're going to have a situation where that may come to the forefront more quickly.
Can I ask you, a lot has been written about screaming bond vigilantes. I look at this bond market at 442. This is not vigilanteism. This is just simply the bears gripping a hold of this market, because I traded in 1994 and 1995, and I understand what vigilanteism is. I think this is bears, not vigilantes. If the vigilantes really grip into this, where does it take us?
The question is, are there any vigilantes left in the bond market? That's the key question, and the answer is everybody's an indexer. And, their tolerance for moving the duration of their portfolio around that index is very small. So you don't have the people in the space that you had before. The other thing is most of the people that are in these spaces that are trading hedge funds are really looking at other areas of the economy and the markets. They're looking at structured credit. They're looking at corporate bonds. They're looking at private equity.
They've got so much more
They're
product to
looking
choose.
other places, and the Treasury bond market could simply become an area where maybe I'll lose a little bit here to hold down the yields because I'm making more over here on this trade.
Such an interesting point,
So
Steve.
it's the dynamic of the market has changed dramatically, and that's why I'm not so sure there really are bond vigilantes anymore.
Well, to be fair, the bond market literally only just got interesting. Post-GFC, it was so boring. Who's left in there that's willing to trade around?
Not a lot.
Not a lot.
The street has very little risk capital.
Yeah.
Steve's here and I'm here.
At least we have that. Steve, so wonderful to see you. We know you have a flight you need to go catch, so we're going to let you go. Steve Rasciuto of Mizuho. This is Bloomberg.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Our principles, our policies in support of the Palestinian people will never change. Our policy in having a two-state solution will never change, and nothing will compromise it. And as long as we are, having the capability to be helpful, we will do it. We did that between Afghanistan, between Taliban and the US. We did that between different parties in Lebanon and Sudan and others. And that's basically the core of our foreign policy. It's been built based on mediation, on trying to help in resolving conflicts between the party. There are countries or people might not like it, but we don't ask everyone to like it, just to understand it.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Welcome back to your Bloomberg Brief. Danny Berger and Manus Cranny here in New York. Manus, signs of a wobbly comeback in the smartphone
Indeed,
industry.
what a great word. It did have us tickled in the break there. A wobbly comeback, a very British phrase for the smartphone industry. Qualcomm reporting rosy results and forecasts. While the chip designer over at ARM, that gave a slightly more tepid outlook. For the very latest, let's get to Daybreak Europe anchor Tom McKenzie. So differentiating between the two here, let's go with Qualcomm first of all. I mean, where was the restraint in that story? Tom?
Yeah, look, a lot of this is about expectations from investors' perspective. This is a stock that's up about 20% year-to-date versus ARM, which is up about 90% year-to-date. On Qualcomm, they beat in the last quarter, but also, importantly for the current quarter, they projected a forecast in terms of sales pretty significantly above expectations. Expectations had been for $10.5 billion. They're now looking at $11.3 billion. It's the high-end devices, it's the high-end smartphones, so Manus's iPhone 16 Pro that is powering this. They're also seeing an uptick in terms of Android devices in the Chinese market, so that's helping them. And interestingly, an uptick of 70% in terms of their auto segment they're pushing into as well. So it was on those factors that Qualcomm came out with this beat, but interestingly and importantly as well for investors, it was the forecast coming in above in terms of those expectations, and they're not as reliant on the smartphone market as they once were.
Is that the problem with ARM, Tom, that is too reliant on the smartphone market?
The problem with ARM, I think, is expectations again. Expectations from investors. This is a pure play AI story when it is not. Rene Haas and the team are, of course, working very hard to ensure they have proper exposure to the data center story and the edge AI computing story. But that will take time, and they still are getting the vast majority of their revenues from a smartphone market that you can describe as wobbly or at least imperfect at this point in terms of the turnaround there. So I think it's an expectation story. Worth noting as well, $15 billion of buyback coming through from Qualcomm. No buyback announced from ARM. But again, they did hold to their forecast for the year. Analysts saying the story longer term, our team at Bloomberg Intelligence, remains in terms of the AI thesis for ARM, may take some time.
Well, no wobbles from Tom McKenzie. Always a joy to have you on. Tom, thank you so much. Okay, let's turn to U.S. politics now. Vice President Kamala Harris delivered her concession speech yesterday afternoon from Howard University. Here's what she told her supporters.
The outcome of this election is not what we wanted, not what we fought for, not what we voted for, but hear me when I say, the light of America's promise will always burn bright. As long as we never give up, and as long as we keep fighting.
Joining us now is Bloomberg government reporter Jack Fitzpatrick. Jack, we got the results for the White House and the Senate a lot quicker, specifically the White House, than most people had thought. The House is still to play for. Where's the math stacking up to right now?
It's leaning Republicans' way. They're depending on which calls you track, they're still shy of a majority. But if they pick up 10 or a little more than 10 more races, then Republicans will take the House. Democrats have been open at this point about acknowledging they have a much narrower path to winning the House, but it still is a little too early to call. It also raises the question, though, what will the margin look like? If Republicans do win the House and they're just barely over the majority, that makes it very, very difficult to push a legislative agenda through. They'll be talking about what they can do in terms of major Republican legislation through the budget process that doesn't get hitched up by the filibuster in the Senate. But if they've got an extremely narrow margin in the House and maybe only 52 or maybe 53 in the Senate, there will be significant challenges for Republicans.
So this is a building story about maybe a little bit more restraint on the execution of tariffs, and as you say, maybe some mini guardrails on the fiscal side. Talk us through the transition to picking the cabinet. We've got lots of notes in our inbox in terms of who might be on that list for Treasury Secretary, from John Paulson, Scott Bessent, and I'm even seeing from one or two houses, Robert Lighthizer coming back, maybe as Treasury, maybe even as Trade. So it's going to be an interesting mix of advisors.
Yeah, they're early in the stages of discussing potential cabinet picks. And again, as I mentioned, while we watch the margins, the more seats, the couple last ones uncalled in the Senate, if Republicans can build up a better than 52-seat majority, it gets easier to get Trump's picks through. There are some high-profile names that you've heard, aside from the Treasury picks, that are still undecided where they'd go. Obviously, RFK Jr., some sort of health role, whether that's HHS or in the White House. Elon Musk's relationship to the Trump campaign has been relevant, but we don't know how formal that will be. There may be some members of Congress who go to the Trump administration that then creates a challenge for Republican leadership if they have those narrow margins. Someone like Marco Rubio may be someone to watch. I'd also throw out, whether it's a cabinet pick or otherwise, Russ Vought, who was the OMB director in the Trump administration last time, is someone to watch, who's tried to kind of institutionalize Trump's politics and philosophy, sort of a background player to watch, certainly.
Okay, names in the frame. They're all making pilgrimages to Mar-a-Lago at the moment. Jack, thank you very much. Our government reporter, Jack Fitzpatrick. Coming up, it is central bank decision day around the world and a Treasury auction, just to keep you on your toes, right here on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Let's get you set up for your trading day. We have a Bank of England announcement that comes, their rate decision at 7 a.m. Eastern. Then we're going to get jobless claims, that data to come at 8:30 a.m. And then it's the Fed announcing its decision at 2 p.m., along with a news conference from Chair Powell at 2:30 p.m., where I guess, Manus, he's going to say nothing.
He's probably hoping to get away with saying nothing controversial. Keep your eye on Qualcomm. We did this with Tom a little bit earlier. I'll just leave you the price check on that. Rising, you've got phone demand boosting its forecast, and ARM is falling, obviously, on the other side of that trade. Still recovering in the smartphone market. Danny, we just got to finish off with, it is day two. We're pausing for breath. I think the Mexican peso, as we started the show with it, you did, it sort of says it all, collapsed yesterday, dollar alpha, and undid all of it in the space of 24 hours.
It shows the euphoria of growth that's taking over, that even the peso is pricing in more robust growth. Okay, that's it for us. Surveillance ahead.
make sure that we're exposed to categories that continue to be relevant to consumers, that we're positioned in categories where we have a competitive right to win.
By strategically adding and shedding assets, General Mills has turned over about 20% of its net sales base in the last 6 years. It's dramatically expanded its pet food platform, starting with the purchase of Blue Buffalo pet products in 2018. That expansion dovetailed with a boom in demand.
Pet in the U.S., pet feeding and treating, is a $50 billion category. It's almost 5 times the size of a category like cereal.
Is this the future of the company? I mean, we so much associate General Mills with breakfast and cereals, human breakfast and human cereals. Are we now going to be thinking about General Mills much more as a pet food company?
I think you'll be thinking about General Mills as a food company where we treat all the members of the family like family.
The humanization of pets is actually the biggest driver of pet food and pet treating growth. It has derivatives in not only feeding, which is the core thing that most households where most of the dollars go against the pet, but treating. And then you start to branch out to things like vitamins and minerals and supplements.
People really love their pets. They want to take care of their pets like they do their family, and it really is a global phenomenon. That's why we recently entered the China market with Blue Buffalo. That's why we bought Edgar & Cooper recently in Europe, because we see the same kinds of trends that have played out here in the U.S. playing out all over the world.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
This was a resounding win for former President Trump.
The idea of good economics has turned into bad politics for the Democrats.
A lot of what we're going to do over the next few days is separating rhetoric from reality.
We now have a new investment regime.
This is the emergence of a new power structure in the United States.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Thursday, the S&P 500, all-time highs. The NASDAQ 100, all-time highs. The biggest post-election day performance in the history of financial markets stateside. Equity futures up 0.2%. The NASDAQ 100 up 0.25%. Julian Emanuel of Evercore. Expensive, yes. Exuberant, no. Price target 6,600 mid-year 2025.
This basically is the melt-up a lot of people were talking about. Mike Wilson over at Morgan Stanley before the election was talking about that melt-up being 6,100. Get it to 6,600. Can we get a 7,000? Somebody come down. But here's the issue, that people were wondering what a red sweep would do to both financial markets in the equity space and the bonds market. And yesterday, we got a taste of something, and if it continues, it will change the trajectory both of the economy here as well as market expectations.
We've had the concession speech from Vice President Harris a little bit later on this morning. 11 a.m., you hear from the President of the United States.
He'll be speaking in front of the Rose Garden, and he also called former President Donald Trump, 45, going to be number 47, President of the United States, congratulated him and talked about the fact that they do want this peaceful transfer of power. This is really this final moment for Biden to try to bring the country together, and I think he's probably going to talk about that today. Also interesting, he invited Trump to the White House. So these two men, which have been basically politically married since 2020, they're going to have this meeting, and there's going to be passing to the torch. It really feels like Back to the Future.
There's a question we've asked a million times on this program in anticipation of this event over the last few months. Does this have the potential to redefine the outlook? And the answer, based on the action of the last 24 hours, is absolutely yes. Goldman Sachs on Europe dropped their forecast on GDP. Deutsche Bank on the ECB dropped their target for rates from 225 to 150. We're already seeing moves on both sides of the Atlantic.
Yeah, over in Europe, you see people expecting a lower rate. Here in the United States, people are raising their expectation for how high terminal rates could be. Basically, this is a Fed that is not expected to be able to cut rates nearly as quickly as they did, as they were perceived to be before this. I'm just looking right now at Matt Lazzetti, who's joining our show later, of Deutsche Bank, basically saying that if it is truly a red sweep, then the likelihood is that the Fed funds rate remains above 4% by the end of 2025. When you take a look at Fed funds futures, You can see right now an expectation that there's only a 70% chance of a cut in December. And now markets see the end of the year next year at 3.75 versus 2.9% as at the end of September. It just is a massive rethink of how far the Fed can go.
This is something Mohamed El-Erian has said on this program quite a few times. The real prospect of divergence between Europe and the United States. Equity futures on the S&P up 0.2%. If you're just joining us, welcome to the program. Your next hour looks like this. We'll catch up with Lori Calvasina of RBC, following the S&P 500's best post-election day in history. Heidi Kribo-Rediker of the Council on Foreign Relations on potential Trump tariffs, and Eric Najarian of UBS as banks rally on a second Trump term. We begin this hour with stocks at all-time highs following Trump's victory. Traders are waiting the Fed's next move and weighing the prospect of a red sweep. Lori Calvasina of RBC writing, historically, Republicans controlling all branches of government has been a strong backdrop for the S&P 500. Lori joins us now for more. Lori, good morning.
Thanks for having me.
What changed for you in the last 48 hours?
So I think the biggest thing is we've just gotten the uncertainty off the table. And I think the second thing we saw, right, is the market seems to be pivoting to the idea of a Republican sweep. And if you look at a sweep versus a split, historically, if you look at the backdrop, when Republicans control everything, your average annual return is about 13% for the S&P. If Republicans have the White House, but you have a split Congress, that's only about a 5% annual return. And if you sort of put that into the context of today, we think it'll be much easier for Trump to get his tax cuts or his tax package through if he has control of Congress. And to be honest, when I talk to investors, that's one of the things they really like about the Trump outcome.
So there are tax trades,
yes,
there are tariffs trades,
yes,
and there are regulation trades.
Yes.
When I saw the banks up 10% on the S&P 500 yesterday, what was that?
That was regulation, and I think there's a little bit of taxes in there, but I'll just rewind you back to late September. I did a survey of my analysts and said, under these 4 different potential outcomes, what's the outlook for your industry? My banks team, Gerard Cassidy and John Arfstrom, sort of led the charge there, but they were both pretty bullish under the Trump sweep. And when we went through, and actually they stood out in terms of their intensity of optimism, much higher than what we saw in other sectors aside from energy. And when we dug into the issues, it was really regulation. And I kind of joked with them a little bit. I did a lot of work on the campaign, looking at the econ policy speeches, all the stuff on the websites, and I don't think I remember either candidate even talking about banks or the financial sector, so this was all muscle memory on regulation.
Well, and this idea that there is this knee-jerk acceptance that Donald Trump will be more prone to reduce regulation. You're leaning into that trade, the financials. You think that that has legs?
Yeah, and you know what? We've been overweight there. We did not bake in political outcomes to our sector views the last time that we did our update. So we liked the fact that the sector was sort of midway through an earnings revision recovery. You saw recession-type lows around the SVB crisis on earnings revision trends, so just deep earnings pessimism. We've been bouncing off that. We're probably only about halfway through that. Valuations have started to look a little expensive for the big cap financials if you look at the S&P 500 on an absolute PE. But we still have some room on the relative PE. And we've actually been pushing people down to the smaller cap financials because we think we've just got a much clearer valuation story there that has a bit more room to run.
So yesterday, small caps rose something crazy, more than 5%. And basically, small caps were the spot, and everybody thought that that was the Trump trade. You've liked small caps. You like them still. What's your hesitance? What are you watching for that makes you a little nervous?
So when we look at the data, and to be honest, we said we were sort of neutral on small caps, but we needed something else besides the Fed to get the trade going, and we thought it might be economic optimism. I didn't necessarily have the Republican sweep on my bingo card, but I think that was the something else in the end. But look, I think the positioning data is already not so great for small caps, to be honest. Small caps have been treated as a political trade in the past, specifically on Trump. So 2016, 2017, 2018, we saw 3 distinct trades into small cap. The first was on economic optimism on Trump, the second was on the corporate tax cuts, and the third was the early days of the China trade war, and it was a buy the USA trade. And each of those, the CFTC data went up to these extreme highs and kind of topped out at around the same place. Well, guess what? We are within spitting distance of that right now, and this is based on pre-election data. So positioning doesn't look great. I think you have to look at valuations. I do not know what they looked like yesterday. My data all lags by about a day. But on election day close, we were at a 16.7 times a cap-weighted median PE. It's a little above average. If you go back to that 2016, 2018 time period, the highest PE we made was about 19.7. So, kind of round to 19 or 20.
Does it make you nervous that yields are rising at a time when small caps are supposed to be the most sensitive to that?
It did. And remember, I'm an equity person. I don't speak fixed income very well.
Yeah,
but
fixed income is relevant here.
Yeah, but I went back and I looked at this yesterday afternoon, actually, and what we saw was around both the 2016 and 2020 election, we got a lot of shifts in the market. And one of those things that happened was that 10-year yields were moving up. And they started to move up a little bit before the election, and they continued to move up after the election. So this was just a Trump and a Biden kind of phenomenon. We also saw shifts in the dollar, though they went in different directions. We saw shifts in the style trade, growth versus value. 2016, it was more pro-growth. 2020, it was more pro-value. But there seems to be something about political leadership transitions that help usher in some leadership style transitions within the U.S. equity market as well.
So basically what you're saying is that at least for small caps in the Russell, it's all downhill from here?
I think we've still got a bit more room. I mean, the valuation data does have some room. The positioning, if I end up being wrong, right, and yesterday was the peak, I'm going to start talking about that positioning chart. But I do think there is some room to run on the valuations. And so again, we go back to some of these areas like small cap financials. They're so cheap. I think they've still got some room.
You mentioned tax cuts. Trump, during the campaign, was talking about 15% across the board for a corporate tax rate. Then you and I were at his economic club speech in New York, and it was the first time he brought up with conditions, have to be made in America. How do you look at these companies where their inputs are made and think about who is actually going to potentially be able to get that 15% tax rate?
It's a big mystery, and I have started to see some strategists adjusting their earnings numbers or doing stress tests, right? And I've done this myself, to be honest. But, saying, well, if we get the 15%, earnings will go up X percent. I did that math just so I would have it done, but I very much cautioned people, I don't think all these companies are going to get 15%. And I think you need to dig into what that deduction is. I will be honest with you, Emery, I've asked everybody I know who has anything to do with Washington, and the only person who actually managed to give me an answer was the Bloomberg law analyst.
Well, I asked everyone too, and no one's been able to give me an answer
but I think we're in a discovery process, right? And so if you think about where things might get tripped up at some point, if we've got a bunch of optimism on the Trump tax cuts that's building, and it turns out, well, it's only these companies, that got this deduction in the past, pre-2017, that's going to throw some cold water on this at some point, if that ends up being the case.
So we've done regulation, we've done taxes. Let's finish on tariffs. Target down yesterday. Dollar General down 5%. What's your advice to people who hold consumer-facing companies with very skinny margins that face the prospects of quite high tariffs?
So I'll give some credit to my retail analyst, Steve Shemesh. When we did that investor survey back in September, I went back and forth with a number of the analysts really trying to understand their policy views, and he was very clear with me. Trump's tax package is good for his stocks, but the tariff package is not. And I think I saw echoes of that in a number of different industries. I'll tell you the one, it is front and center for me is industrials, which is trading at astronomical valuations. If you look at a median PE for the industrial sector in the S&P 500, crazy, crazy expensive. I think people are overlooking the tariff risk here. And if you go back to the 2018 playbook, so that's March to December during the height of the China trade war, industrials and materials absolutely got smoked. So if people want to look at that sector and say, oh, tax cuts are good and we can manage through the tariffs, I'm not really buying it right now.
Laurie, one of the best, a real clinic in about 8 minutes. Appreciate it. Laurie Calvasina of RBC. Let's get you an update on stories elsewhere this morning. With your Bloomberg brief, let's cross over to Danny Berger. Hey, Danny.
Hey, John. Qualcomm shares are up 8% in the pre-market trade. Its fourth quarter earnings and revenue beat analyst estimates. It also gave a bullish forecast for the upcoming quarter, signaling a rebound for the smartphone market. Also moving much higher in the pre-market shares of Lyft, going up 22%. The ride-hailing company reported third quarter results that beat estimates. Fourth quarter expectations, those also topped the forecast. Lyft announced plans as well to work with autonomous vehicle companies, including Mobileye, May Mobility, and Nexar. The fortunes of the 10 richest people in the world surged by a daily record yesterday after Donald Trump won second term as president. According to the Bloomberg Billionaire Index, the net worth of billionaires led by Tesla's Elon Musk surged by $63.5 billion. Among the other top gainers there, Amazon's Jeff Bezos, Oracle's Larry Ellison, and Berkshire's Warren Buffett. And that's your brief, John.
Danny, thank you. Up next on the program, looming Trump tariffs.
What can go wrong is that we get the inflation coming much earlier than the productivity improvement. And where would the inflation come from? Mainly the imposition of tariffs.
That conversation is up next, live from New York City this morning. Good morning.
we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live every trading day. Balance of Power live around the world every weekday, only on Bloomberg.
What a couple of days in financial markets worldwide. Equity futures